Human Performance Lab. And today we are going to be doing something a little bit different. Something that's hopefully fun and exciting and interesting for everyone. But before we do that, let's get into our pre-market analysis. We're doing a replay, right? No data today. US is celebrating its 250th birthday tomorrow, and so the markets have closed. So we're going to do some replay. So the first thing we're going to do in the context of the replay is get our all session volume profile chart together. And the thing we need to do for this is go ahead and merge this major profile since June 1st into the other profiles. And now this is going to be our dynamic profile for the day that we are playing back, which is July 1. And TikTok, can you see this? No. Oh, you're all the way over here. Oh, well, that's good to know. That's much easier. I kind of like that. Okay, beautiful. So TikTok's set up now. And then this is our dynamic, or this is our static, excuse me. This is our static profile from the day before, which would be June 30th. This is our dynamic. And then this, of course, is the major profile that we're trading in. So the first thing we can do is take a look and index our unfair highs and unfair lows, right? So there's unfair lows, and then our unfair highs are all the way up here. Now, I don't want to use this profile. It's just too large. So I'm going to need to, though. I'm going to need to. I need to do it. I just need to do it. So we're going to do that, and we're going to index this, and then we're going to expand these or extend them. And then we're going to put that chart away. Now, we're going to bring this chart up, and this is our unfair lows here, right? Which really, and this chart, which I like better, we have it down here. And there are unfair highs right up here. Now, some people will take these and say, okay, you know what? I'm going to go ahead and put in areas of low volume and those type of things. That's not what I want to do here. Hey, Czar, welcome. Thanks for coming in. Thank you for your question. For the profile for Monday next week, do you combine Thursday, Friday, and Sunday? Okay, that's an excellent question. I do not, and this is why. Because the overnight session, right? So the market's going to close on Friday and it's going to open up on Sunday. The Friday session is going to be the dynamic, right? So the Friday session is going to be here dynamic, and then everything that happens on Sunday is going to be here. So the dynamic profile is going to show up here for the Friday session, and then we're going to show up here for the Sunday. And then the Sunday is what we're going to index off of for our dynamic levels. If that makes sense. Does that help? And then we're indexing Friday's data. So this would be Friday's data, right? This would be indexing Friday's data here, and then Monday will be, or really this will be Monday's session, because this is only for the US session, where that other chart I just had up is for all sessions. Let me know if you have any questions about that I can clarify. No, you're so welcome anytime. And we're about ready to get into it here. I'm going to be doing something a little bit different today, and I hope that you enjoy it. I had a question yesterday, and I had to answer it with, I don't know. And then, of course, when I answer a question with, I don't know, I got to figure it out. And I think I figured out something. So we're going to see. Stay tuned. It's going to be starting here momentarily. So this is actually July 2026. So we're seeing the July data. We got to go back to the June, and I don't really want to do that. Let me go ahead and reset this to only show July 1, because I don't want to give myself a bias trading July 1, because I don't want to see or know what happens in the charts for that day. So I can go in and trade this as if I don't know, because I really don't remember what happened on Wednesday. All I know is I wanted to replay it because I didn't trade it as well as I wanted to. And so this gives me my practice session to trade it better. This is where I practice, right? At 2 p.m. every day, I practice my art of getting better in my trading. And then I apply that practice to the next day live trading in London and the US. And it's helping me get a lot better trading the volatility of the US session, which has not been an easy thing to do recently. I don't know if anybody else has found that same thing, but it has not been the easiest thing to do recently. Gold trading, welcome. Thank you for joining. And I'm just trying to get this chart to show up for just the July 1. I don't want to, because we're showing the 3rd of July here. So I just need July 1 in here, and it's not cooperating. Is that because, no, it's on a Wednesday. Well, okay. I don't want to look. I don't want to look. I don't want to look. And my charts aren't moving either. This is still showing the 3rd of July. I just need the 1st. All right. Well, the 1st of July, we have to index a new profile. Okay. Now, here's the thing about new profiles. Okay. Most individuals, when they start a profile, they're using a high, they're using a low, they're using something along those lines. All right. I'm not doing that. That's not what I'm here to do. What I do is I recognize market shifts and market conditions. And the market shifts and market conditions that I'm looking for are the closes above an indexed range. And so, or below, right? And so when we come up into this area, we're still here in this range. Okay, there we go. It just took a minute. I guess it had to download data. Ah, I know why. I know exactly why. I'm trying to replay the NASDAQ mini, and I am currently replaying the I'm trying to replay the NASDAQ mini, and I didn't have it on the NASDAQ, so I didn't switch my thing over, my symbol. All right, so when price action closed below this area, we closed below this profile over here. And so now we have a new profile. And then price action comes up, closes above the high of that profile, creates new profile. Then we close below that profile, that creates a new profile. And then we close above it here. And now we're working off a new developing profile. The reason why I use these closes is this. Price action is still ranging, but if you notice, we have a higher range here comparatively. So this range is actually in value area of developing price. It's not outside, and we don't have areas outside. So if you just use this profile, you can index unfair or low volumes nodes within value, but you should still be anticipating rotation. And I use the closes because they signify something, a possible breakout. And a market breakout can start a trending condition on a shorter time frame chart. So you think about a 30-minute chart, that's still a short time frame chart comparatively to a daily, right? And so we're looking at a new range to develop a value or a trending market condition on a breakout. But as we know, breakouts can always revert back to old value. So we leave the dynamic up just in case, and we start trading the new range. Well, a new range developed on July 1. It's a market shift. And this is why I wanted to come back and trade this day, because it's a market shift. It's one of the hardest days for me to trade. Once value has been established, I can trade around value all day long. Once a trend is established, I could trade around trend all day long. But when you're going from value to a possible breakout or a new value area, you've now created a shift. And these are the days that I need to develop more as a trader. And we are getting quite a few of these days, but there's still value days. They're still trading a value. We're not getting in a trend necessarily, but they still create a trend on the short-term chart. And you have to be able to recognize that. These are the market shifts that allow us to flow with the market instead of trying to utilize the same methodology every time for every market condition. And when we can adjust to market conditions, guess what we're able to do? We're able to flow with the market. And that's what we're doing here. So we have this new area of value. And I've already created my unfair lows and my unfair high information, right? But right now, we're in a trending market condition, right? So we have this developing area of value. We have unfair lows in here, but we're still trading down. We haven't actually moved back up into value area high yet, okay? So we need to index some low volume nodes, which we really don't have any on this profile. So we're kind of flying blind a little bit today with areas, but we should be anticipating price action if it's going to go into value to possibly come off someplace of these highs. So we can index these highs, and I'm going to go ahead and index this whole area. And we're looking for price action to move up to value area high to confirm this is going to be value. And if it doesn't, and we break below this area, now we're looking for potential shorts. Okay, so this area here, this area here. And I'm going to go ahead and delete the other areas. And then I'm going to do one more thing. Well, two more. We need to extend these. That's the one. So they're extended. And now two, I need to grab these areas because I'm about ready to show you a whole new chart and a whole new way of reading order flow. And you're not going to necessarily know this because you're not in my head, right? But in the context of order flow, I utilize footprint charts to read order flow, okay? Well, I just figured out how to do that from a different perspective. And I'm about ready to show you that perspective, but let me get myself onto July 1 on this new chart on the actual mini and not the micro. So just give me a second to get this up. And here we are. And let me make sure that everything is set up here for my TikTok friends, because I don't think that this is showing live for you guys. It's not. It is not. I need to be over here for you to be live. There we go. And what I'm going to show you is I'm going to show you how to read order flow just like you would in a footprint chart, but on this chart. Okay. Now, the primary difference between the footprint and this chart is where I'm looking for higher trades or bigger trades, I'm using total volume. This, when it creates its bubbles, is using delta. So we're using the difference between the bid and the ask for strength comparatively to total volume. And personally, I like delta better anyhow. So we've got delta and we have the So we have delta and then we have price. And this is all we're going to use. And I'm going to attempt to trade this day directly on this chart and teach you guys how to read the footprint, just like I would read the footprint, but here. And so the first thing I need to do before I can do that is index these areas right here on this chart. So I have, what is that, is that really 218? Yeah, 218 to 261, okay. Well, that's because this is still on the mini. So let me get this back to the actual NASDAQ. You know what? We're already in the area. We're just going to start with the area here, and we're going to move forward. I should have done a better job of getting this set up for you guys before we came on. But it is what it is. We realize the mistakes that we make and we keep moving forward. Now we're going to hit play. Okay. So the first thing we're looking at here, right? So we're looking at some sellers hitting the bid, the bid right now, right? That's the first thing that we're noticing. Okay. So we're hitting the bid. Price action's moving a little bit lower, making a little bit of a lower low. Okay. We don't really have anything of significance. What time is it? So it's 7:35. No wonder why it's not working on the same time frame. Let me get it to 9:30 because we want to be at the open on this at 9:30 in the morning. No, it's at 7:20. And I'm not too familiar with the way that this works on replay, so just give me a minute. I thought it was all set up, but apparently it is not. And see, now I have to disconnect the feed. So disconnect the feed again. Hit set. Now we're at 9:30. Now we can hit play. Now the first thing we want to do here, though, at the 9:30 is we want to index a few things. The first thing we want to do is down here at the lows, okay? We have what you could call potential rejection here, but what I look at it is that conversation between buyers and sellers, okay? So we have an index buyer and seller. We have that going on here, but this is right at the open. This is a little bit before the open. So I don't really necessarily want to index these highs yet. I want to give it a little bit of time, but these are our most recent lows and the conversation happened. And it happened up here as well. I don't want to index this area. I want to index the high volume mark, not the low volumes right now, the high volumes. Our next area where we have that same high volume or the higher volume and a conversation is right here, okay? So now what we just did is basically created our very own little volume profile. Our unfair highs or our unfair lows, right? The difference is what we're looking at here is the higher volume. So we're looking for a magnet and we want to see price come back into these areas. And then of course, the value area high that we're looking for on this particular day is way up here around the 30,600, which is off of the minis. And I'm not going to be able to index that, which is fine. We're just going to trade it off of this anyhow. But I just want to see how well I can trade areas off of the heat map. Never doing it before and doing it live the first time, other than some practicing today during the session, but during the London session. But this is the first time in the US session. So we've already broke down a lower through this area, and we're seeing buyers trying to come into this market, and we're already selling through, but very little volume down here comparatively on the sell side. Possible rejection coming into this area, and that means we can possibly move back up into this area. Sellers are now starting to come in a little bit more aggressively, right? We're still trading below this area. We have buyers and sellers coming in, nothing aggressive, fast price action, okay? Price action still coming through, doing exactly the same thing. We're testing the highs. Now we're here into this area. No buyers or sellers. Price action traded through. If we come back and pull back into this area and I see some buyers, I'm going to want to start setting up for some longs. Price action comes in. We don't see a buyer there yet, which is fine. Traded back through. Seeing some buyers in this area, but now we're below the area. And I'm looking forward continuation to the downside here, possibly. And because of this rejection and because of the way this area held, I'm looking at this point for possible buyers to step into the market. And I want to try to buy this around this area. And I'm waiting to see in another area forming down here for stronger buyers and sellers to look for another area of that auction. So I can index another area. So we didn't get our buyers through here. Price action is traded lower. Now we're accumulating selling pressure down here. No real buyers stepping into the market yet. There's a buyer here. I'm anticipating a pullback into this area and possible rejection if this market's weak. We didn't get that. We traded right through. We're trading higher highs. Price action is now pulling back a little bit here. And now we have some buyers stepping into the market. So I want to try to put some, oh, well, I can't trade this. Well, that sucks. Okay. Price action starting to move back into our area. Still no buyers yet. Wait and patience, right? This is at 9:32 in the morning, right at the open of the market, and I'm working on trying to trade the US market. Price action still coming down, doing its thing. I don't have another area in here where I have an auction where I can look at doing anything in terms of support and resistance, but I do above me. Right here. And we already tested into that. And I should have been short and I didn't see it because I was looking at the lows and not at the highs. But we don't have anything coming in to the long side yet. So I'm going to go ahead and take off of this index at the moment because right now, what we have is buyers in control or sellers in control of this market from up here. And I will get that down to us in just a second. I wanted to extend that out. Price action still moving lower. We have sellers. We do not have buyers and sellers stepping into the market. And I'm just waiting for an auction to take place down here. That's all I'm doing. Waiting for an auction because we have some buyers here, but we don't have, there we go, buyers and sellers right there. Now, if that holds right here, this is our area of interest. Just like this is our area of interest. We just built our little cells of a value area. Value in this area, sellers, buyers. Okay? Price action hasn't moved up yet, but that's fine. We could trade through it. I don't want to buy here because this would be calling a low. I don't know how price action is going to react through this yet. We haven't given it time to establish itself. All right? Because what happens in value, we can get price action to break out of value and start trending lower. And that could be what's establishing here. We don't know yet. What I want to do is do exactly what we would do in a regular volume profile. We should expect value area high to be tested up here. And if it is, I'm not getting long for it. I'm looking forward to a short up there to revert back down to this area of value. We're still developing. I don't have enough volume in here in order to call this an auction. It's just not deep enough. If you look at your little bubbles, right, they're not big enough. And so what does that mean? This is like seeing buyers on the offer on your footprint, but not seeing a stronger move, right? So I don't see any absorption happening in here at this point in time. I don't see rejection happening in here. Price actions moved below my auction, and we're just kind of in this tight range down here. And so I'm not really doing anything. I'm just watching it, and I want to see a development of an auction take place down here, and I can move my area if that happens. We're making lower lows and lower highs. So we're still moving lower, but I'm not willing to take a short here because I don't have an established market direction yet. The market hasn't told me here's a value. Now I can get into the market. Okay. So I'm waiting for developing value to show itself, where I always have developing value already set up on a 30-minute chart. And so price action now is telling me to wait until I have that value. Now, if we had another area down here, but we don't, these are just sellers, I could be looking at trying to short here, going back to the magnet below us, but I don't have a magnet below us. So I don't have any place to reference of where I would expect price action to go back down to. So I'm waiting, and I'm just waiting for that information to come in. We have it above us, but not below us, which means that we could be technically in a short-term trending market condition lower, and we just don't know it yet because we haven't broke a lower low. But right now, that hasn't confirmed, and we don't have an area of value to look for a magnet to price in case price rejects from this area. So I'm just waiting. That's all I'm doing, is waiting. We have our area here. We've traded above it. Now we're trading back into it again. I could be buying here. When I see these buys come in, and in here, in this area, I could be buying. But as you can tell, I can't buy right now because it's not set up properly. I need to work on how to do that as we move forward with this. And if I'm buying it here, at this point in time, I'm looking for price action to go back up there. So it's not really necessarily a scalp. I'm actually would be adding more in here right now. And if you're looking at 40 to about 50 as a target, right, in this area, you should already be scaled out with 1 or 2, depending on how many contracts you're trading. That way, if a price comes back down against you and you see sellers in here, you can exit the position, wait for it to come back up, and use this as a scalping area that you're going to be able to take into a day trade. Now we're below that area. Price action still moving lower. I would have been getting out of the market at this point in time, been scaling out here, adding again, using the market itself to fund my next position or the next contract in the terms of risk. Now we have an auction developing in here, but it's pretty much in the same exact area. We still don't have anything below us. And price action can continue down, but I don't have a frame of reference for it. So I'm going to let this go down right now until I have an auction that I can reference. And we're just seeing small delta in differences. Buyers getting a little strong, sellers getting a little bit strong. We're not seeing any form of strength to this whatsoever. And what does that mean? We're probably going to see some chop, some directionalist price action, and this is already keeping us out of that condition because it's not developing itself in a way that would allow us to be able to trade this range. And if you're trading this range, you're just scalping. Possible, almost, an auction there. But the buyers and sellers, there's an indifference. There's actually a stronger level of selling here than buying, okay? I really like to see something like this, right? Where there's almost an equality to the whole thing. Now we're going to test this area. If we get back above it again, we're going to do the same thing with it that we did back here. So you'd be waiting for it to make a higher high, right? To confirm that it's trading through this area, you need a higher high. You don't need this high to break. You don't need this high to break. You need this high to break. Sellers again, right? Stronger sellers, possible rejection coming into the market. 2 sellers down here. Now I would be waiting for there's some buying right there. Boom, buy. Add another one. Now I have 2 on in the same area and average in a little bit lower. Okay. Average in around 35, 45 is my first target. Put that limit order in. You're out with the first target. You have a runner. Where's your runner? You're putting a limit order in right below this area. Now buyers are starting to get a little bit more aggressive. Go ahead and start trailing your stop if you want to trail your stop. You don't have to. This is a day trade. You can move your stop to a break even if you want to move your stop to a break even in case it breaks through this area. You can move your stop directly through here just a little bit, right? For basically a 2-to-1 risk reward ratio, right? It just depends on how you want to manage your own positions. If you're out, right, you're looking for another higher high, a pullback into this area to buy again. And there's your higher high. We haven't had a pullback yet. I would still be in this. I wouldn't have gotten out from this because there's no strong selling pressure coming into the market here. That's strong selling pressure. Price action immediately moved above it. I'm still in a contract here looking for 40, 46 from a 35 entry. 135 to 246 is what I'm looking for. This is how you turn a scalp into a day trade. And you're trading value within a heat map instead of your footprints. Because the footprints took me a long time to read and develop the way that I do. This is just much easier for me to see it. What is this? A bigger trade coming in. Buyers defend the low. Price action moved back above that little area of sellers. Now we're testing it, not able to make a higher high. We don't have buyers moving in here. Anticipate this low to be taken out. Price action's moving lower. We've got sellers stepped in here. Again, unable to make a lower low. Do we make a higher high? No, but we have some buyers in here. Where are we going to test? Probably right here in this area. We tested in that area. Price action, we get a buyer in here, breaks the high. Buyers are still strong. It's easier for me to see this here than it is even in the footprints. And I didn't even know how to read this yesterday. This just came to me today, and I decided to come online with you guys and share it with you today. All right. Now, we still have resistance up in here in this area, and you can see that resistance happening. We have some buyers coming in, starting to lift the offer, but immediately a seller steps in. And then what happens? Buyers get aggressive again, moving price into this high. We move right back into the area where the sellers come in. We didn't break the high, and now we are willing to sell lower. But where do we go lower? To this area of support in this price right over here. Rejected. Buyers are going to be strong above this area to push price above here. I'm not saying they are. That's what we're looking for. Sellers are going to be strong, looking for price to move down in this area. And no sellers are strong right now. No buyers are strong. So we're trading in this little range. This is exactly what I've been trying to get you guys to see in the footprints, but now I have a visualization for it. Now, price action, sellers stepping in. We're going back down into the lows. Seller stepped in here. Price action immediately came higher. We want to see what happens in this area. Remember, we're still long a contract. We had 2 off already at 400. We had an expense of at least 200, maybe 300. Okay, so we're up 100 or 200 right now, and we're holding on to a contract. We have sellers in here that we tried to test, and price action was strong enough to get buyers to react above this high. testing this high now. If buyers are strong, we're not going to break this high. We're going to find buyers in here and we're going to break this high. If buyers are weak, we're going to see sellers in here and we're going to break this high. Now I want to move my stop to a break even because I'm anticipating this area to possibly break. Price action right there at the 35, that's going to be my break even. I'm out of the trade for right now. Price action's moving higher still. Beautiful, fine. I don't really care. I can index another area up here of strength that I can get back into the high side if I want to. Price action's trading below this area now. Went through the sellers. We tried to break the high. We couldn't move higher. I want to short in this area. I called it too late, so I didn't get in because I called it too late. I saw it too late. That's okay. I missed the position. Price action moved back straight through again. Buyers right over here breaking the high. Let's see if we can get a pullback back in here where the high volume is. We're anticipating the pullback. Price action still making higher highs. Pull back. Do I see buyers stepping into the market? I see them here, but I don't really want to risk the position because this is our rotation area. The low is here. I don't want to buy this high. I want to wait. I want to wait if we have to break these highs here, pull back into this high volume area, and go long after that. Much easier to see the areas and the levels here than it is in the footprints. If we get price action to move back down into here, I'm going to be a buyer if I see buying pressure in this area. Price action's moving a little bit higher now. Beautiful. Do we break the highs? We break the highs. Do we get a pullback into these highs? Pull back into the highs. We can buy this high if we want to. I would like to get in a little bit of a lower price. Sellers in, I'm buying now. Little bit of price action movement higher. I'm willing to buy lower prices down here. Buyers step back in. Beautiful. Sellers, I'm buying again. Now I'm in my 2 again. I'm in about the 85 mark. I'm looking up here about the 95 for my first target. Filled. My 10 points, $200. I'm holding my next one back up here to 46. To 146 from, what was that, about an 80, 85 entry, exit at 95. So the 85 entry right in here, we're getting back into that area, okay? We have a decision we have to make. Do we want to be out at 80? Are we going to hold this? Sellers try to come in here and we did not break below the 80. Price action's moving higher again. I would be moving my stop now if we don't break this high to a break even. We break the high. We should see buyers established. We have already tested this area. We should see buyers established into this area if they're strong. Boom, we break the high. Now we can turn around and start moving our stop if we want to. Where would I move the stop now? Right below 90. Why? There's a low volume node right there. Rejection, price action, higher volume here in this area. Another high volume spike in here. You could put your stop to a break even or put it around the 87, 90 area and lock in a little bit of profits on your second target, on your second contract. There's no reason to take an expense on it now. Price action is just trading around here, but look at how much buying strength there is. Should anticipate price action to be moving higher. This is the first sign of sellers that we've seen in the market. We now have a little bit of sellers coming into the market. Price action starting to move lower. Buyers are trying to support. Where do we test into? The highs of this area again. We haven't broken lower lows. Should not be thinking that we have sellers in here that are aggressive because they can't even make lower lows. We have a bit of an auction here. All right. Index the auction. With an auction there, move your stop to 95 or even 05 for your lower lows that haven't even broken yet. I would move my stop to about the 95 area right below here because with the auction, we could be breaking some lows and testing into this area. Now I'm out. $400 in the position plus the original before 100 or 200, we're up $500 or $600 right now in total positions at 9:48, 9:49 in the morning. We have a new auction up here, right here, that we need to index, that price action could come back to because it's high volume. We have our lower area down here. Price action's chilling here, making its high. We have the high volume here. Do we come back to it? Do we come back to these highs right here? If so, I want to be a buyer. If not, we break above here, these highs, and pull back. There's the pullback. Do we see buyers? Do we see buyers? Not yet. Not yet. Buying right there. Okay, you're probably in at the 200 area. You're not going to get in here. You're in around the 200. There's a 210. There's your first target. You can move your stop to a break even if you want to because you do have resistance here. But you've locked in your $200. Now you've got your 200 here. Do we see a higher high? Not yet. Price didn't facilitate trade there at 200, so we're still in. And now price facilitated trade and you're out with your next 200. So you're up between $700-800 on the day. And it's 950. We break these highs, but these are the highs that we need to worry about. And I don't want to short here yet because there's nothing telling us that sellers are in control of this market. We should be biased to the long side. Now we have buyers here. Do we get a pullback into this area? We need to pull back here into this area and buyers stepping in. Buyers stepping in should be long. Should be long here at the 25. All right. You can put your stop right below this area. You're in at 25. You're buying again right there at 25 again. Now you're in with your 2. You're looking for 35. You need these highs to break. 35s, boom, target, hit, stop to a break even. Either to 25 or even just risk 5 points. Down here at 20 on one contract. What are you targeting? This area right here is your target. You're targeting 46. $46 wasn't quite filled there. We didn't trade through it. We traded through it there. There you go. Target hit. Anybody with me? Anybody here? If so, thoughts. What do you think? What do you prefer? Do you prefer seeing this or seeing this? What is easier for you to see and visualize as I'm talking about order flow? Because the order flow is still the same. We're seeing buyers and sellers. We're seeing auctions. We're seeing everything. We're just not seeing it in the context of numbers, of total volume, or candles. We're seeing it in delta, but we have our areas. We have our areas which to me are even much more established than anything that I can do here. And in those areas, I can see where price action breaks above those areas and pulls back, not in the context of here, where I can see a buyer coming in, making a higher high, and then creating a pullback into here it to a level, but in a way that I can't visualize well enough to create an entry like I can here. And so my question is, what do you guys like? Just join late. How are your blue zones determined? So the blue zones, the way that, and that's an excellent question. Thank you, DS. I appreciate you. The blue zones I created, And what I'm doing is, let me take you over to this chart first before I explain it to you, because I have a theory, okay? And this is a human performance lab, which means that we deal with theories. My theory is this. Let me find a good area for us first so I can see a decent one. I might have to change the parameters of this just a little bit. This is my 30 minutes, so it's not really going to... Nope, this is my... Okay, good. Let me hold on just a second. And let me show you this first, so I can explain the theory to you, and then I can show you how I'm drawing those blue lines and how it's exactly the same. All right. Now this is the micro, which there's way too many of them. All right. The mini doesn't have as many. Let me see if I can switch over to the mini now. Maybe it will let me. Hold on. I'm hoping it does, because it'll be easier to see here. Beautiful. There it is. Now let's get this back down into 40. Now, mind you, that was also the first time I've ever traded the US session from a heat map. I've never done it before. Okay. See these areas right here? Now, I don't trade bubbles, okay? But what's happening is we have buyers and sellers getting aggressive around the same prices. And what I call these are auctions, okay? Because if you believe in, or if you have the theory, right, of auction market theory, you believe that the markets are nothing but an auction, okay? That's all it is. Well, in an auction, you have to have a buyer that's willing to buy at a particular price an item, and you have to have a seller that's willing to sell an item at a particular price. And you can think of eBay, right? Where you can go on there and say, okay, well, I'm a seller, I'm going to accept any price you give me, or I'm only going to accept a minimum price, right? But in order to get to a particular price for a deal to be done, the buyers and sellers have to communicate to one another. It's either got to be a buy it now price, or a price that you're not going to accept lower at, and then buyers come in, bid the price up because there's interest. There's interest in the item, there's interest in price, which pushes price up as the communication happens. And then there's sellers that are in the market that are saying, no, 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 no. You know, we believe that this price should be lower. Well, when we have strong buyers and sellers coming into the market at the same time, to me, that's a key zone. That's a key zone of support or resistance. That's a key zone of high volume. I don't need a VPOC, volume point and control, in order to be able to determine that we have, oh, you can't even see it. I'm sorry. There. You're on TikTok. Sorry, I didn't move the chart well enough. You already have the auction. You already have volume point and control in your volume profile. But where you have strong buyers and sellers at the same point, in the same bar, near the same price, there's a conversation between buyers and sellers. And I say there's something important to that. So when I'm picking up the blue zones in these areas, I'm doing the same thing. Where are the buyers and sellers aggressive at or around the same price? Here, down here, the buyers and sellers around the same price. And I'm just picking up the highest volume around those areas, because that's what I'm indexing, is the high volume, because I'm expecting price action to come back to that area. Just like here, price action came down, came back to that area, came back down again, right into that other zone. We broke the zone, came back up, traded through, tested back again after we broke it. Gives you your re-entry point all over again. Price action comes up, gives you another one at the high, rejects, trades lower. Can't even trade below where sellers got aggressive before. Can't even get down below that, really. You should be seeing selling pressure down here to get back below here if sellers really want to push this down. They didn't. What did they do instead? Small buyers stepped in and pushed price higher, directly back to the auction area. I didn't index this because I already have a higher area, and I didn't want to index an area in what I'm looking at in the context of developing value between my two magnets at the lower side and the upper side. And then price action comes right into that area. But when we break this area again, what happens? We test it, and then we go higher. And we test it with sellers and buyers here, not necessarily aggressive, not like this, right? Where there's a big disparity between the two. This one's much smaller, but they still come in at that same price, at that same area. Small buyers come in here and push price higher. We're going up on lower momentum, not on stronger. Continuation. Because we're going up on very little participation. We're pausing on wider participation. We're coming back to the widest participation. We're rejecting off of the lower participation. And I could have indexed it off of here. But again, I'd already indexed it here. But I mentioned this as another auction. And there it is, right there, below us. Does that answer your question? And this becomes kind of like VPOC. Price actions trading around here, breaks down through, comes back up again, trades around this area. We can use it for new entries. Amazing explanation. I currently use volume profile and iceberg zones for 5-minute swing trades. Yeah, absolutely. This is much more of a scalping, but as you can see, it can turn a scalp into a day trade as well. I appreciate the kind remarks there as well. You know, in iceberg orders, I can absolutely see that too, right? Because you're seeing the accumulation, right? So one lots. But is it just one person or is it more? And then you're combining those right into like a block order, so you can see where the higher volume is. It's really the same thing, right? The only difference is instead of restructuring something, I'm trading the price action as it's happening based upon how price reacts around the higher volume, not the way it's reacting around the lower volume. And when I've always used volume profiling on longer time frames, I always index the lower volume, right? Always, because price action hasn't spent much time there. And if it hasn't spent much time there, you're expecting it to move away from that rather quickly. So if it gets there, it could reject because that's not spending time, or it can fly right through it. And so then now you have to look at rejection, you have to look at all of this other stuff. How do you teach that? How do you teach that consistently? How do you even really teach rejection in a way that is mechanical enough to follow, but shows up enough that it's meaningful? And that's very difficult to do because rejection, how do you, in order to confirm rejection, you're waiting for confirmation. Now you're lagging. You're using the only two leading indicators you possibly have, which is volume and price. If there's any leading indicator, that's what it is. But I don't even like calling them leading indicators because they only tell you in the moment what's happening because there's nothing in the future. There's no crystal ball. And to be a leading indicator, it's almost a crystal ball. So what we have is the most recent up-to-date information we possibly can. And if we add in stuff like rejection, we're just adding in laggingness, a lag to current data. And I have a problem with that. Intellectually, I have a problem with that emotionally because it just doesn't sit with me right. Yet I followed it for years because that's what I taught. That's what I was taught, and I thought it was right. I came away from the markets and retired in the end of 99 or 2019 from starting in 1998 when I took my first trade. I took some time off from about 2000 to into 2000 through 2001 to about 2003. But even in 2002, 2003, I was still trading options. Okay. And then in 2006, I went to commercial investment banking with a very large bank and went to a trading floor in commercial mortgage-backed securities. Is it the same as this market? No, but there's similarities, a lot of similarities. Then I went to a brick and mortar prop firm in 2008 through 2010. In 2010, I became a retail trader. And there at the prop firm, I was trading event-driven stocks and only using this information here. I had no chart up. I had no anything else. I was using time and sales and a reconstruction of time and sales. That's it. I had two of these up. One of them reconstructed like an iceberg, right? And then the other one was directly just current information without the iceberg. That way I could see where we had reconstructed large trades. And this was before, Jigsaw or anything else came up, right? You just filtered this out and you were looking for the larger groups of 25, 50, 500, 5,000, 1,000, whatever amount of shares you're looking at, right? Then I went retail and went futures. I traded currencies. I started in currency pairs. Then I went to future currencies. Then I went to the ES, the Russell. I was trading 25 lots and 18 lots in the Russell, 25 in the ES was my high. And then in 2019, went through a really bad divorce, emotionally cut off, went through a huge state of depression that almost killed me in 2023 due to blood clots. Terrible, terrible stuff. And then that situation of that near-death experience, if that's what you want to call it, I kind of got myself out of the funk, and now I'm here. I got back into trading again, started looking at charts off of streamers in April of this year, and now I'm here. And I only explain that whole direction of mine, that story, to say this. What I'm seeing in the charts now, one, the technology is very much different. But what I'm seeing in the charts now are so different from what I've ever seen. It's like that time off allowed it to just all click. And I came to the charts trying to see the same thing or do the same thing I used to do. And I'm like, no, that doesn't make any sense anymore. This makes sense. So I'm not trying to see rejection. I'm not trying to see anything else on those in that definition. What I'm looking for is, if this is an auction, I should be seeing participants. And when I'm seeing participants, that's meaningful. How do I trade around that meaning? And then how do I explain it best to my audience so my audience can understand it? Do they understand this and the numbers? Or can they understand this? And when I saw this yesterday I was asked a question, how do you use the heat map? And I had to say, I don't know. I have it up. I have it up over here. Here, I'll show you behind the curtain, right? I have this up. Okay. It's there, but I don't know how to read it. I'm reading the footprint. I'm reading all the information in here. I'm reading it out loud to you guys live. So I already know what's going on. I'm not too concerned about any of that. Right? So I don't know how to read the heat map. But then I looked over at the heat map this morning and I started seeing the same exact thing. Can't even tell you how. I just started seeing the same exact thing that I started seeing in the footprint, that I see in the footprint. But it was easier for me to see. It was easier for me to talk about. It was easier for me to do. So I'm here demonstrating it to you guys. One, to see if I can. I really wanted to trade it live. I just don't know how to yet. I'm going to figure that out, and I'm going to work on that this weekend. So tonight, I'm going to work on how to put that all together so I can trade it. And then tomorrow, I'm going to come on here, stream again. I don't know what time, probably between 10 a.m. and 2 p.m. New York time. And then I'm just going to start doing days and just see how I do with it. Man, I'm really sorry that happened to you. It's crazy how amazing this stream is. Diaz, thank you. I appreciate that. You know, and I appreciate your sincerity in that. I have this as a response. I'm so grateful. I can't tell you how grateful I am. Was I grateful then in those moments? Oh, hell no. Of course not, right? I'm in the deepest, darkest area of my life. I lost everything. I mean, literally, it's country music. It was a country song and it wasn't playing backwards. I didn't get the wife back. I didn't get the car back. I mean, I literally watched the dream house that I built taken away from me. My SRT Jeep, sold in front of my eyes. I'm living in this little crappy $650 a month apartment, in a skyscraper with, crackheads as my neighbors. My son stopped talking to me. It was 12 that the whole thing was a complete disaster. I don't even want to get into all of that mess because it's not part of my life anymore, right? I can't show you where I was then. You can only see me now, but let me tell you, it was bad. And in order to the point of I started to get blood clots because I was working from home from COVID, right? I would sit down and watch whatever on whatever stream or whatever I was doing at that time. I was eating like crap and I wasn't moving or working out, and I never left my apartment. I would leave my apartment maybe once every 2 or 3 weeks and nobody to talk to. I don't get along with my family. Never really have. I have a lot of childhood trauma that I had to get past, right? That was my life and that was my experience and my existence. Not to say, oh, wow, look, woe-ish me, or either look at where I'm at now. But to share that part of that story because it was meaningful and me developing this. And unfortunately, I was one of those individuals that had to go through all of that to get to where I'm at right now. And I'm so grateful that it happened because I'm here living this experience. So much better, right? And that's what I'm doing. And that's what I show here. And I'm not trying to show, revenue and all this stuff. I'm just doing good. And, I want you guys to see everything. This is the Human Performance Lab. And what does that mean? The Human Performance Lab means that it's how do something is on the court acting. Our behavior is happening. And it's either happening by old patterns or it's happening by conscious participation. And if old patterns are on the court playing out your life through predictive behaviors, your conscious participation, your intention, what you want for your life, its ass is sitting over in the bleachers, watching and observing your life being played out. So how do we get on the court? How do we get that portion of us on the court so our intention can start playing out? Because when it does, our actions align to our intention. And that fulfills our intention. And when our intention is fulfilled, we're fulfilled. And when we become fulfilled, guess what happens? We experience joy. Yeah, let me see what you had said there because I just went on a spill. I'm sorry. And I'm just glad you're here to still tell it. I agree with your trading method completely. If you'd like, I can share a picture of my current chart setup using VP. Yeah, please definitely do. I have a Discord. If you want to put that in that, I can put it on here too if you want to have everybody see it on stream, or if you just want me to see it, just let me know. I'll never show it to anybody else. The Discord, if you do an exclamation mark and social, the Discord should show up. I know it does in YouTube. I don't know if it does in TikTok. It should work. The command should work. I'm brand new to all of this stuff. I've only been streaming since last Monday. I don't know what I'm doing with all of that yet. Yeah, no, it didn't. Try exclamation mark Discord. See if that works. And if not, Discord, it's live the return. And so you probably should just be able to do that. If you go to YouTube, the videos have the link for Discord as well, some of the videos. But if you go on YouTube and come on in, and I know the command works in there. I am working on that. I mean, I'm going to be spending time this weekend getting my chat up here so everybody can see it, getting the follows and all of the little alerts and stuff up there too, so I can give my appreciation to individuals that are appreciating my work. All that stuff will be done here soon enough. But I would love to see your screen. Absolutely. You know, I was using Sierra charts before this, right? And this is just deep charts. And I know a lot of people have issues with deep charts and stuff like that, but I literally got ATAS, ATAS, however you pronounce it. I don't know. ATAS, I don't know. I don't even know any traders anymore, to be honest with you. I got that, and I tried to see the heat map in that, and I just didn't read anything. So I went back to my tried and true, which is Sierra charts for my, footprints and stuff, because that's what I used back in 2012, 2013 when I first started learning auction market theory, and we had the technology of footprints. And then I found deep charts on something. I don't even know how I found it. I think it was through, I like watching Valhalla Gary. I think Valhalla Gary is phenomenal. He's entertaining. I'm not going to say anything about his trading. I think he's entertaining, and I think he's there to try to help people the best most traders can. I think that he's really trying to do a good job. He's not trying to sell stuff. He's not trying to make his money, off of this and that. And he used something similar to this. And then I got this, and then I realized that there was a heat map, and there was all the little things and all the little toys and stuff, right? But those toys, you already see it in the volume, right? It's just gives you that indication of fast markets of, okay, that's what's going on. Look at the numbers. Oh my goodness, what are you talking about? 36 and 2, that's not high volume. I don't understand why you're marking that. So yeah, no, I just come in here, and I saw a lot of streams out there and what other people were doing, and I'm like, nah. Let's help people formulate how to do this, but I'm not going to teach a class. I'm not going to charge. I want to teach people the demonstration here, and I want to teach people what it looks like when it breaks down, like it did yesterday, in fact. It broke down. I was just way too tired. I shouldn't have been trading, and it broke down. And I broke down. Watch that stream if you want to. But that's the human performance, right? What happens when we do? How do we recover from that? What do we do when we recover from that? Sorry about that. I forgot to turn my light on. How do we recover from something like that? How do we get back into the game? And I really appreciate you coming on, DS. I absolutely love this. I love talking to people. I love, are you dropship? If you're dropship, yeah, definitely. You can, if you want to give it to me personally, just go ahead and DM me. It's all good. If you want to, oh shoot, probably shouldn't show that, huh? If you want to, just put it into, if you don't mind everybody seeing it, you can either put it in trading or you can put it in general discussion, whichever one you want to do. So yeah, this is my little trading stream, my little community that I'm trying to build and put together. We had some really great individuals, actually. Some individuals that are doing some stuff on Bitcoin, a lot of volume stuff, of course. A few other different things. We got a quant guy in there that just like he boggles my mind, way too smart for me. But I got some work this weekend that I want to do on his stuff to kind of help him key in on some key entry points in a highly leveraged market that's extremely volatile. So we'll see what happens with that. But if you want to join in on that too, please, by all means, you're going to be a great asset in that. Um, and let me know when you drop that picture and where you dropped it at, because I'd love to see it. So yeah, that's my story and it's what I'm doing, and it's good times. Oh yeah. Yeah, 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 yeah. This this is a clean setup, my friend. Oh my God. You want to set up my charts for me? My charts are a complete mess and a disaster comparatively to yours. My goodness. Here, let me put this back over here. I don't want anybody to see this. Um, my goodness. Wow. Wow, 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 wow. I like how you're connecting. I like how you're connecting. Holy shit, this is wow. This is really, really, really good work. I feel so inadequate now. Yeah, no, I can definitely see that. I don't want to talk too deeply about this because I don't want to, share your ideas. You, my friend, have experience. You have a plethora of knowledge about the trading world in order to be able to put a screen up like that. Impressive. Absolutely 100% impressive. And I'm seeing you connect a couple of things there that I've never thought about connecting before, but when I think about it, it kind of is, but a little bit backwards from what you're connecting. Because you're connecting the one side, I'm connecting the both sides. But the both sides at two different prices, which is kind of doing the same thing, but two places at the same time. It's similar. It's very, 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 very similar. But I've been on a tear since May. Um, I had my first down day since May yesterday in the U.S. session. I haven't had a down day in London yet. Not trying to brag or anything else by any stretch of the imagination. Just I'm doing a lot of stuff too with asset management ideology, where we, as a trader, and like let's say you're all in as a trader, right? You live and die by the area that you entered in, by your entry itself, and you're going to have you have your stop and you have the other things, right? But you live and die by that entry, and you have to be right, because if you're not, you're going to get stopped out. Um, I'm glad you like it, man. Thanks. Built it towards my style personally, so it might not fit everyone. But your idea of volume profile and order flows, heat maps, are very informative. Well, thank you, thank you. I appreciate that. I'm trying to be here for the individual trader. I struggled for years trading. It took me a long time. I wasn't one of the individuals that just figured it out in 6 months to a year. It took me a long time to get consistent. Now, there were times where I had really good runs, right? But then I would have drawdowns. But I blew up some accounts in the beginning, but I learned when I have a 20 to 30% drawdown, I need to stop. And then I would start back over again. But when I got started in my trading accounts, I usually got pretty lucky in the beginning. The market was flowing well with my methodology. I was doing well. I would start with a $15,000, $20,000 account and I would turn it into like $65,000, $75,000 in a matter of, 6 weeks or so. And then I would start having my drawdown from that. And then from that drawdown, I would stop, reassess, make adjustments as necessary, and then come back online again. But I did everything through my back testing and stuff in static charts. I didn't do anything, through playback and those type of things, even though I was using order flow and that sort of stuff. But that I think is what's really changed my trading, is the way I practice. And so, yeah, no, you're spot on, my friend. I don't even know what you're doing in a trading room like I have here, because you're impressive. We need to sit down and talk. We have a lot of like thoughts. What platform are you using? Is that your own platform? Did you create your own software? I know individuals that do that as well, because, sometimes your platforms just aren't there. I'm glad you stopped in. Truly, this is amazing. You didn't see my pre-market analysis either. You haven't seen my other charts. Here, I'll show you. I do my PMA live as well for everybody too. This is a daily perspective of profiles with all sessions. And right now, we're in a daily perspective. We're trading in a range, and we have been since June 1st, right? We've been on a tear with that trending market, but then we came into this range. So that's this range here. And then I keep 1 day of static information that I can index off of. And then I utilize the static because, it's current price. So then I take my areas off of that, which was really just my unfair highs, unfair lows, but I'm looking at profiles, right? I'm looking how the days developed. I'm looking at the high, I'm looking at the low, and I really just want to see, how it developed, like double distribution, for example, right? At what point in time are we going to come back and test this high volume down here? And when we do, are we just going to reject again because we're within a rejection zone or expected rejection zone? Or are we going to start developing value in this area, right? So we got all of those different things and stuff that we go through. Then I have a daily perspective as well through other profiles, but it's only the US session. So then I only have my US session here that I go through. And this is where I start to kind of develop my areas a bit more. But then I go into a 30-minute chart, and this is where I come in and create my custom profiles. And I create my custom profiles a little bit different than most people. I don't use highs and lows. I'm using breakouts. Because a breakout to me is going to do one of two things. It's either going to move into a new value area, move back with one of three things. It's going to move into a new value area. It's going to move back into the previous area of value, or it's going to trend. It's one of those three things. That's what a breakout does. What that means is at that point on that bar, there's a market shift. It's either a breakout that creates a trend or another balanced area, or it reverts back to the mean and goes back into other value. So those market shifts to me are the most important bars that exist, and also the most difficult for me because you're in value, it's easy, right? You know exactly how you're going to trade value. In a trend, you can trade a trend, right? You're just looking for the pullbacks. You just need the information to do that. And the heat maps give me such a much better way of doing that than I've ever imagined. And then you have the shift itself. How do you trade that market shift when you don't have a reference if the market is currently trending or in balance? And I have a very difficult time trading those days. So I index those days to start my new profile. And that's what I do here. And that's why on this day, on July 1st, we broke out of this range down here, which I had already indexed because we closed below here. So I had a area of value here. Here, I'll just draw it real quick. Right here, there's the close below this low. That's my market shift bar right there. Price action became rotational and value again here. This profile is now intact, and it's intact until this bar breaks out of it. Now we're trading back down again. Now I'm anticipating this to either hold and move into a trend, or move back, not a trend, excuse me, move back into developing value area high, possibly trend, and test these highs up here, or we continue down and we move down into this prior area of value. And here's the low volume nodes that if we do come back into this area, we can short, anticipating moving back into prior value. Oh, you can't see the chart that I'm describing right now? Oh, no, you can't. There we go. Sorry. I apologize. TikTok is difficult. I'm still learning. There. So there's the areas of value. There's this one here that I had indexed, and then the new one established is right here. And then the areas of the red lines, that's the ones that I'm talking about of if we break below this area here, we can come down into these low volume nodes below them, pull back, and look for a continuation play back into this area of value. This area here can be rejection. It's an inflection point, right? It's either rejection or the acceptance back into unfair highs of the previous value. And then price action rejects here. It's going to move back up to value area high, possibly creating a new balanced zone. And that's how I create the areas of interest. Now, I didn't do that on the heat map because I used what I call auctions, the high volume of buyers and sellers around the same price, to give me areas of magnetism to trade either towards a trend or away from, anticipating it to come back to the other side. And feel free to critique that idea. Because here's the thing, right? This is why I call this the Human Performance Lab. It's a lab. Okay? The theory is here. The laboratory is how we practice the theory at real time to either one, demonstrate that the theory works, two, that the theory needs to be adjusted, or the experiment that was ran based off of the theory had holes in it, and now we just need to run the experiment over again until the experiment is aligned to the results that we're looking for. Now the practice is complete. Now we can apply that practice to the live edge, to the theory once again, and see what happens, see what the results are. Let the results over time tell us, let's go back to the lab. Do we need to adjust the theory, or do we need to adjust the practice? And of course, the practice is the experiment itself. And then how do we apply that as well to the psychology and the makeup of a trader? And how do we create that makeup aligned to following those procedures and that setup that we just practiced? How do we maintain that? in both practice and live at the live edge. And then that portion of the psychology aspect is very much aligned to Andrew Huberman's work with what he talks about neuroplasticity and how to change neuroplasticity after the age of 25. The environment no longer becomes the primary source. It changes that. It takes focus, urgency, action, and sleep. And so then we apply what focus is. We apply urgency, which is right here, right now in this moment, that you want to take action towards your intention. And that's why I picked trading for this lab, because trading, this bar right here, this is the present moment. It's right now. And when you match the present moment right now to your intention, you take action. You're intentionally taking action in the present moment, where intentional action is the only place that can be taken, is the present moment. And so we're practicing that in here without even realizing we're practicing it, because that's just something I don't really explain to people too much. But you seem like a person that already has it all going on. And so I figured that you could do that. So thoughts, ideas, concerns. Do you see, knowing you with volume profile and volume, your volume analysis, your price analysis, your footprints, how you're looking at things, how you view the markets? Do I have holes in my theory? Because if so, please point them out to me, because I'm only here to get better. Because by me getting better, the individuals that tune in, they get better through that process as well. I'm not saying I have all the answers. I'm not saying I'm right. I'm not even saying that I'm good at this. Let the demonstration tell you, to show you if I'm good at this or not. If I'm a person that you should even listen to. So I go through that whole process of my pre-market analysis every morning before I start trading. And then I go through and start trading, which is usually mainly on the 2-minute chart on the footprint. But I don't know. There is something about that heat map that just clicked with me today. And just doing that live for the first time here in front of everybody, I don't know. I rather enjoyed that. It was much more relaxing. It was much more easy to talk about, in my viewpoint anyhow, from, how I talk about the footprint chart comparatively to how I was talking about this chart is night and day. And I think it's going to be easier for people to see it here visually, but I don't know. That's something I'm just going to have to test out. But I have very few followers right now. Very few people watching or tuning in, because I'm brand new. I mean, I've been streaming now this is the end of my second week. But yeah, that's the heat map. And so hopefully some individuals, I know that I have some individuals that are on vacation right now because of the US holiday tomorrow and its birthday. And so hopefully they can come in on Monday or Tuesday or watch this video and say, okay, yeah. I like this, or no, go back to the footprints. We'll see what happens. And I may not listen to anybody at all. I might just use a heat map because, like I said, I felt pretty good about that. Oh, and in here in the heat map, I'm using delta, and the footprint it's total volume, which is two different things. Well, in here, I still have my total volume, and it's funny, right? Because at this low here, you have increasing volume on high cell volume. You know, you would think that if that information is true, that price action would move down, but that actually became the rejection point. I don't think I heard it properly, but the red areas are lower volume areas that you're expecting price to rip through and make a new area. Yeah, so I indexed these lines right here to low volume points and unfair highs, and then I do low volume points and unfair lows. And what I'm anticipating is in order for this, Just Shorts, what's up? What's your settings in my heat map? I'll have to get those to you. You're in Discord as well. I will get those to you. That'll be easier to do than try to explain it to you. Um, so what I do is I use this profile and I'm looking at the unfair highs and the unfair lows, right? So in this orange area, the way this, and I'm just explaining it to you the way that I read volume profile. In order for volume, 70% of all volume of this range to be in this area from value area high down to value area low, volume had to be distributed in that area. Distributed. There we go. That takes time. So price had to spend time in here in order to develop this range. And if you look at the bars, right, we definitely spent a lot of time in this area. A lot of bars traded through this area. But when we come up here, price action didn't spend too much time in these areas. That's where I'm anticipating possible reversal and rejection from, are these areas, because we didn't spend time there. Yeah, I absolutely will. Just Short, definitely. What I'll do is I'll just take a screenshot of all of them. It's just standard stuff, and of course, it's stuff in deep charts. So each platform is going to be a little bit different. If I need to get onto another platform because it's easier for people, I will absolutely do that. But I just find deep charts is so easy to use. I don't have to worry about it. To rip through and make a new area of interest. Right. So, and I don't look at it necessarily as another area of interest. What I look at it as price is trading in value. And as price is trading in value, right, we're trading in this overall range. The value is here, where 70% of volume has traded, not price, but volume. Then we get into these areas where not as much volume has traded. What's the difference? What's really the difference between those two? We have acceptance down here, and we have rejection in these areas. So price accepted in here until it came down, rejected, moved back into value. Where did it move back to? Value area high. And the highs of the range, where we rejected, came down, rejected from the lower area, tried to make a new high through a breakout, failed, came through immediately through these areas, right back into value, where it rejected a low volume area. And this was a much lower volume area when this line was here than it is here. That's not a very good example, but I don't have a lot to index here because price has been distributing down here more, right? But it rejected from that area, moved right back up into high volume. But when it moved into high volume or to value area high, what happened? We traded around VPOC and we rotated for a while. We created rotation. What we don't see down here and up here is all that much rotation. So I'm anticipating price to move out of these areas into value to rotate. I don't want to enter around rotation because now I have a lot of rejection areas, a lot of acceptance, less rejection. I'm going to get chopped up. But if I enter around the unfair highs, the unfair lows, where I'm anticipating it not to trade or not to spend a lot of time around, I'm going to have a higher probability of not getting chopped up. Now, we can say here we rotated, but we still rejected off the low volume. We rotated in here a bit, but look at the lows. We still rejected. We still rejected. And then price rotated higher. Price moved higher and rotated. Price came back down, rejected, moved back up again, rotated at the high before creating another breakout, pulled back into that range, rejected, almost off of the unfair lows, or off of the low volume nodes, and then started to trade higher. And that's just the way that I view rotation and I view trending market conditions and I view auction market theory. Auction market theory to me is all about the auction where price action is rotating in areas where we can assume or establish or anticipate rejection through the unfair levels of the auction. It's kind of like an auction, right? A regular auction, a big group of people, and it's a speaking auction, right? You get a lot of noise into the auction, and then all of a sudden, the noise starts to dissipate because the auction is rejecting those prices. The noise isn't there. Your rejection, your noise. Your rejection, your noise. Some noise can distribute within the rejection, but you usually still have fairly large rejection areas or good rejection areas, even in that rotation. I hope that makes sense. But that's the theory. I learned that from an individual named Cam Dedward. I didn't come up with that on my own. I did learn it from Cam. I don't know if Cam is still around. I tried looking for him recently, last couple months, and I couldn't find him out there. He had a company called L2ST. He's out of the UK, England, around the London area, or might be in London proper. I don't remember. But that's where I originally learned this stuff from. And that's basically a gist of the way he taught it to me. And then, of course, I've read books on market profiling and those type of things, and I didn't understand too much in that stuff. It was just way too much theory and over my head. And the concept of I understood the information, but how do you actually apply it to market mechanisms in a way that you can actually use it? And I think that's a problem with a lot of the books that are written. How do you apply it? Well, yeah, I get the concept completely. Haven't thought about how I should use low volume besides choppy. Yeah. And low volume can create choppy, but what is choppy though, right? Choppy is still a ranged balanced market, right? We can still see unfair highs, unfair lows, even with chop. And if we get in short from the highs and long from the lows, here, I'll give you a prime example of that. Let me get into today's market. I actually traded this today. At the live edge. Not as well as I wanted to because I was doing other things. I was distracted. But check this out. Let's see if I can get back far enough. Is this today? Yeah. This is 12:37. We need to go back. We need to go back. Oh, it's not going to let me go back far enough. That's the problem with this structure here. I can't go back far enough, but this is still a good example. This is an example of a good range. Earlier, the range lasted longer. This is chop, right? Low volume chop. Little areas of high volume, but low volume chop. A day before a US holiday where the markets close early, right? You should anticipate chop. But this is what I mean, though. If there's enough room in this range, you can absolutely pick up inventory in this area and unleash the inventory in this area, picking up new inventory in this area to move back to this area of inventory as well. Now we have a chop range that we see. We should anticipate chop to continue. When it doesn't, we finally get stopped out. Beautiful. You create a new range, or you go with the trend. Where did it pop back to? Almost to that range in the first place on the breakout. I'm telling you, I love this heat map. There was 15 trades I could have taken between the short and the long and the short side today in that range. I only took 3 of them. There was 15 that I could have taken. Each one of them did just this. Now, some of them stopped just above this area, but most of them came through. Some of them traded through like this did. I would have taken an expense on a couple of them. But if you're gaining that inventory in here, and every time I had a little buyer step in, I just pushed the button again, and I was on the micros. That's why I was on the micros, right? And so I was just adding inventory, adding inventory. And then I had my areas in there of where the higher volume was that I just popped in and used limit orders for to get myself out of the market. And then I flipped and did the same thing on the sell side. And way it worked was I had a range up here, which created the rejection. That range held. It created a new auction and another range below it. That became my range. And then the bottom range just held through an auction, and it held the whole time. And this is the range that it held. And after the first break, it only tested back up here one other time. That would have stopped me out, got me back in up here, holding that area as a stop. And the total stop in the whole position with 4 micros on was $235. And all of my targets down below were over 600. So I still had an over 3-to-1 risk reward ratio on the 4 targets and the stomps, trading during a holiday session in the US session for like 2 hours. I don't trade US sessions because it's too low of volume and too much of chop. Monday we can replay that and I can show you. So at 2 p.m., if you're interested on that, if you're able to show up, I'll go ahead and replay that at 2 p.m. so you can see exactly what I did and what I'm talking about there. I can't replay it right now because you can't replay the data. It doesn't let you until the next day. I think probably because the way that Rhythmic does everything. And I could see it on the footprint as well. But the way that this line is built, without having the wicks and everything else, right? But being able to demonstrate it at the live edge where you can see the wicks as they're developing within the bid and the ask, it was phenomenal and so easy to read and so easy to trade. And where I'm utilizing, basically a trailing stop now, I was just able to set limits in the areas and it just went boom, 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 boom. And then it rejected and went boom, 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 all the way up to the upside. And it trades in the areas enough that you're able to establish some pretty decent sizes if you want to. So they're going to do some humanizing stuff now. I love the way that you verbalize the verbiage you used there, the way you worded that. That was awesome. I love it. Thanks, man. I really appreciate you. I appreciate this conversation. I appreciate your inputs and your insights. Um, Thanks again. I'll be here for your stream again. Market's closing in 1 hour for me. Oh yeah, 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 yeah. You're trading Bitcoin, right? I mean, dude, seriously, my hat's off to you. If you're trading Bitcoin, my God, I won't touch it. Will not touch it. That's way, way too fast of a market for me. Way too fast. I won't touch it. I'm going to look at it for just shorts. One of the other members of Discord, and he's in YouTube right now. He might be gone now, but he's amazing. He's the quant guy. He's so stinking smart. Oh my God. This guy is literally, he asked me questions and I'm just like, dude, I don't know. He gave me a number. I'm like, well, what's that number? He's like, that's how many bars are in a 5 minute chart in a day. And I'm like, oh, okay. I'm like, well, it shows you what I know. I'm an idiot, right? As in the Marine Corps, it's like the ID10T form, right? ID, I slash, right? God, ID10T. Yeah, the ID, then a one, and then a zero, and then a T at the end. ID10T. But yeah, it's good to have you. Thank you so much for joining the Discord. Thank you so much for showing me your screen. I'm really honored. You know, traders don't just do that with just anybody. So I'm very honored that you did that. And yeah, I look forward to working with you. Look forward to working with you, my friend. FX Max, thank you so much for the subscription. I truly appreciate you. Thank you very much. I'm going to have all the bells and whistles hopefully done this weekend. I've been talking about that for a week and it's still not done, and I swear I am working on it. The guy that I usually have doing it, he's been really, really busy. He's kind of flaked on me a few times, but I'm not going to hold that against him because he's amazing at what he does. But yeah, yeah, you have a good one too, DS. Really enjoyed it. Thank you so much. I hope you have a good weekend. Be safe, have fun, try to stay cool, but have fun. Any other questions? Any comments? Concerns? Everybody just think I'm full of a bunch of baloney and BS, or are you getting something out of this? I'm getting something out of it. So I'm going to keep doing it because of that, because it's definitely helping me. It helps me every time that I come in here to explain something. I'm always learning something new. Always. Did this just pop up or did I draw it from there? I'm going to have to replay that because I thought I had it here. Did that move? Because if it did, I don't like that. FX Max, I love that name, by the way. Anything else that I can go over anything with? Anybody have any questions, comments, concerns, other intentions outside of trading? Anything? I'm here for another 9 minutes. Unless, of course, we get another conversation with somebody and I could be here for a couple hours. I got time. I am looking forward to this heat map. It's kind of a new thing for me. And like I said, Just Shorts was the one that asked me about it. And I told him, I'm like, I don't know how to use it. I have no idea. Um, And then it came to me this morning, just looking at it. And I think that's kind of what happens, right? We look at something and we're just like, I don't know, right? But we're not really open to it. But when we allow ourselves to be open to something, really open to it, without judgment, without expectation, just open. And I think that's what an empty cup means, right? We're open to new information because we're not coming into it with a preconceived notion. We're not, well, I don't know what that is, or that just looks foreign, or that's weird, or, whatever it might be that we're looking at with something. But when we really come to it and we just decide to look at it for the sheer sake of looking at it, information comes to us. And if we just allow that information to come to us, I don't know. I think there's something beautiful that comes out of that. At least it did today for the heat map. Roy, how's it going? Roy, are you the one that one day you asked me, or you told me that you're 20 and that you were struggling? Please help. Was that you? Or is that somebody else? Because they were also from Africa too. And the fact that you're tuning in from Kenya, oh my God, that's so amazing. Love it. We got some runners from Kenya over on our cross country and track team. They're doing phenomenal. Love it. Thank you for joining. Appreciate you. And good night to you as well. I know it's late over there. Thank you for tuning in this late. Truly, truly appreciate you. Thank you. Well, everybody, I really, really, really just want to say thank you. I want to say thank you for the positivity. You're not the one? Okay. All right. I sent them a message. I couldn't remember who it was, and I haven't seen them again. I felt really bad because they left that comment, and I really do want to interact with the individuals and what they say and those type of things. So I just wanted to check in. Thank you for letting me know. But thank you so much for tuning in as well. Especially, I don't know. I just think that's amazing how small the world is. I'm from the 80s, right? Well, I was born in 76, so I'm 50, right? I'm ancient dinosaurs. Heck, I could be a dinosaur. We don't know. But it's so interesting because in the 80s, right? The world was much smaller, or was much bigger than it is today. We weren't connected. I mean, we still had to write letters. I mean, literally write letters on paper and pen. I mean, it's so archaic today, right? We didn't have access. We didn't have something like this where we could just talk to somebody from Kenya, right? In this type of dialogue. And I love this. We are now open to the world and global, and I can't wait for a few generations of this to see how the patterns of humanity change and conform to the new patterns of this global world, global connectivity that we live in now. I wish I could live to see it. I think it would be awesome. I love it. Cross-cultural knowledge and just information that we just didn't have access to before. Just shorts. I need to do something for you, don't I? I'm over here rambling and not getting you the information that you asked for. So here is this. And if you're still here, I'm just going to go ahead and put this in the general discussion. I don't think that needs to be anything crazy or anything along those lines. And if anybody wants it, they can have it. And then I can have Sushi create, he's my mod, by the way. I can have Sushi create a new place in Discord for it. I could, but he'll yell at me because I'll create it wrong. Not really yell at me. I mean, the guy's too kind to do all of that, but you know what I mean. He's from Turkey. And then you probably want these two. So here's this. And then this. And as you guys can tell, you know, I'm fully open to everything, right? I mean, not just in ideas and those type of things, but I mean, just in terms of technology and my settings and everything else. I'm not here to hide anything. The only thing that was actually hidden was the heat map. And that's just because, honestly, I mean, before today, I did not know how to use it, literally. I didn't really see a use for it because everything I do within it that I just did within it today, all of that stuff is I already do within the footprints. But in my viewpoint, it's easier to see it here than it is in the footprints. But I don't know for sure if that's true. I need feedback from the community to tell me what they prefer. And so if you happen to watch this, let me know what you like. Do you like the heat map? Or do you prefer the footprints? And if anybody's talking to me in chat right now, I promise I am not ignoring you. I'm just getting all of the settings to all of the stuff that's in my footprint or in my heat map real quick. Getting that for an individual that's in the Discord community asking me for it. And then I will be right back into chat to check it and let you know that, and read it and let you know that I am not ignoring you. Because I don't want to ignore anybody. All right. There it is. That's done. Anything? I'm a newbie too, kind of struggling, you know. You know what, Roy? We all are. We all do. I mean, I struggled yesterday. I have 33 years of experience in this, and I struggled yesterday. You know, it's part of the process. It's part of trading. It's part of what we do. Market conditions change all the time. When they change, it's not like, you know, we have a few days to get used to it. It's like a jet ski, right? It just changes direction. So quickly that it's insane. And the markets are the same thing. And we also have to be just as fluid. I use the analogy of there's a big storm coming, right? And you're an oak tree, right? And it's a big enough storm that oak tree doesn't sway. It doesn't move. It just stays still, right? And when it stays still, if it's a big enough storm, it's going to uproot it. It's just going to knock it right down and uproot it. But a palm tree sways with that storm. And really, unless it's a huge storm, that palm tree is going to live, to survive through that storm because it swayed. We need to be that palm tree. And what's the storm? The markets. And we just sway with the markets. Not rigid. Not in our, you know, trading plan and our rigid discipline, right? That's an oak tree. It's going to topple us over. And let me tell you, every time I came to the market as an oak tree with my rigidness, with my disciplined nature, and I'm going to follow my plan, it always, always, always uprooted me in some way. But when I come in with a discretionary nature, right? And my areas are fluid and changes with the market condition, and I flow through that, I don't get uprooted near as much. I can at times. The market can be such a fierce storm that at times, yeah, it's going to happen. But those times are few and far between because the market is usually not that type of storm. And if it is, the volatility is so high that you're probably not in it in the first place, i.e. news events. And so if we stay out of news events and wait for the volatility of the news to subside, then we can go back to swaying with the storm after that noise, after that huge wind stop blowing. Let's see here. Just shorts. And Roy, seriously, thank you so much for stopping by. I really hope that, there's some information that you can glean out of this that you can find helpful. I'm not here. I don't have a course. I'm not here to develop you into a trader. I'm here to give you the information, right? So this is the way I look at it. LeBron James, for example, or, look at football, right? Pele, Messi. Okay. What do you want? Do you want LeBron James's basketball? Do you want Messi's soccer ball? Or do you want their skill? Because I'm not here to give you their tool. I'm not here to give you a basketball. I'm not here to give you a soccer ball. I'm not here to give you a bat. I'm not here to give you a car. I'm here to give you the skills to use it. And then it's up to you to develop your skills and how strong or how big of a professional you'll be. Are you going to be in the Hall of Fame of all traders because you got that good? Or are you going to be the sixth man that comes off of the bench, but still does his job well? Is still a professional, still shows up, still plays the game, still profitable, but not a star. It's up to you. It's up to you. I'm here to teach the skills, not to give you the ball. And what does it mean to give you the ball? It gives you an indicator. Here, I'm going to give you an indicator. I'm going to give you a setup. I'm going to give you this. I'm going to give you that. No. I'm going to give you the framework. And the framework, once you learn the framework, then you apply it to the markets. And that's how you build the skill, because it's your perception that does the application. And I can't do that application for you because your perception is different from my perception. And perception is what we use to see the world, and it triggers our actions. And so, because your perception is different from mine, I can't give you a ball and say, here, this is your answer. It's not going to be valuable to you because you won't be able to develop the skills around it, because the way that you view the world, the way that you view the charts is different from mine because our perception is not the same. But if I give you a framework, if I teach you a framework, you learn that framework. You learn it through your perception, not mine, yours. And now you can use that framework and your perception, your individuality, what makes you you. And you can use you to apply you to the framework. And now you have the skill. And that's what I can help you with. Just shorts, aggregated liquidation works amazing. I had found out like it's 2 sharp pinpoint entries, but not done years of back tests, but done on recent week. Trying to replace it with heat maps, as I earlier talked to you about. high leverage, so wanted to be pinpoint. Yes, exactly. Now, this is what I want to do this weekend for you. I want to apply this on Bitcoin. In fact, you know what? I think I can. Let's look. Let's just I'm just curious. I'm just curious. Okay, well I can. But my God, it looks like Minecraft. Jesus. Is it because the market's closing? What is going on right now? Literally, this looks like Minecraft. I mean, look at the bars. It looks like something directly out of Minecraft. And what is this accumulation going on up here? My God. Well, there's an auction. There's an auction that's taken place right hither. There. Yeah, I see that. I can't say that I like it, but I see it. Um Well, let's see what happens here. Do we get a pullback into this area, and could we accumulate size within the area without it breaking? I mean, is it even moving? Is it closed already? I don't even know what's going on right now. I don't even know the times of this market. I have no clue. And what's interesting to me is another thing that's interesting to me, not just the thing, but there's multiple things that are interesting to me about this. Okay? So we have the bid and we have the ask, and there's a spread between the bid and the ask. And so we have sellers at the bid, but nothing there is at the ask because we've got a spread. Does Bitcoin always have a spread? I want to know why it looks like damn Minecraft. That's what I want to know. It's like, oh my God, I'm in creative mode right now, or I'm waiting for a creeper to come and blow me up. I mean, doesn't this kind of look like a creeper right here? The face of a creeper or a group of creepers? Am I just imagining this? Bitcoin is straight up out of Minecraft, man. That's my first just visual representation, but what is up with the spread? I mean, look, this is a creeper. Look, the eyes, the nose, the square head, totally a creeper. This is ridiculous. What's up with the spread? Short, you're going to have to explain that to me. Why do we have a spread in this market? Not only do we have a spread in the market, but why do we have sellers and buyers split on the bid and ask? What is it? Is it my settings? What is it that I am not seeing here? Because this is crazy. Too much spread. Is it always that big of a spread in this market? That's why I stopped. You always have a spread. Okay, okay, okay. There's always a spread. So if you're trying to buy this off of a pullback, for example, you're buying the 62640 when it's trading at the 62520 area. Why do you trade this? I look at this and I'm like, oh hell no. No, I'm choosing not to participate in this at all. Why are you choosing to participate in this market? and the spread can be so big that it can be liquidated. This is like when I was trading event-driven stocks, right? When I first got started, I'll never forget this. Okay, I think it was potash. I think it's the stock that it was. It was moving, and I was looking at getting in at like 40, and I wanted to go long, and I entered a market order, and I got filled at 40.60. So $40.60. And I'm like, what the heck just happened? I'm trying to get in at 40. Why am I getting in at 40 at 60 cents higher? And immediately, of course, I get filled and it starts going against me because the market already moved in that context through the spread. And I just so happened to get filled there because I placed my order. And so then I got stopped out at like, I think it was like a whole point lower. And so I was like, what's going on here? And my mentor over at the prop firm was like, he explained to me spreads, and I didn't even understand what a spread was. Just because it's what I have already really I wanted to do Forex, but it's banned. And you can't trade the US markets. Oh, we live in a global world, a global economy. Why do countries have rules and regulations that doesn't coexist with other? Damn it, we need to get you a visa. We need to get you a visa here in the States and let you trade the indices. Is what we need to do. You know what? That's what we need to do. I need to get big enough to open up my own prop firm, hire you with a visa, and bring you over to the States. Would you even be open to something like that? I mean, I don't know if you have a family. I don't know. I mean, you seem to be a student, so I'm thinking you could be open to something like that. But I somehow cracked it after getting liquidated 1,000 times. Yeah. And so then you cracked it after getting. How did you survive the expenses of that? I have all kinds of questions because this is ridiculous. And then you told me when I first brought it up that it's going to continue up, is what you told me. Well, it definitely hasn't moved down. But that's a quasi auction right there. Interesting. So would you buy this? If you were going to buy this, income, but you also do business? Yeah. Yeah, 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 yeah. I know. Oh, this hurts me. Oh, look, there's another creeper. Oh, what is the other thing that's not a creeper? That's this guy here. Look at him. The one that has like the skull face. Look at him. That's totally that guy. And this is a bat. Oh my God. You're playing Minecraft in a chart. What the hell? This is what happens when you give millennials and Gen Z a computer and charting software. They turn it into Minecraft. This is a bunch of. I'm joking. But God, it was funny. Damn kids. Oh, where's my water bottle at? I need some water. Give me 1 second. I'm looking for my water bottle. I'll be right back. What the hell kind of newfangled nonsense am I looking at here? Jeez. I'm glad you laughed at my joke, though. It was totally a joke. Yeah, no, I don't. Because if you're going to sell, let's say you're looking at this area. To sell this area, you're filled down here. You're not filled up here. You're filled down here. And then, of course, to go long on this, if you're doing this, you'd be filled all the way the heck up here, not down here. the range isn't completed, so it's going to go up a bit more. Gotcha, gotcha. And I mean, I can't go back that far. I mean, that's as well, I guess I can. So you're saying that the range, there's auctions at like every price in here. Wait, this is just a flat line. Am I missing something here? Okay, I'm gonna have to let this run. I'm gonna have to get some back data in here because I need to, excuse me, I need to look at this. This isn't something I'm going to be able to do just on one weekend. This is pretty intense, to be honest with you. God, I'm playing Minecraft while trading. Oh man. I mean, is it possible to smooth some of this out with settings? I don't even know enough about the settings of the heat map in order to be able to think about how to do that. Just ensure you're connected to Binance, like the live data should be from Binance. Gotcha. Now this is from the CME. This is from the CME, not Binance. I don't think I have Binance data through here. No. You know what I want to do? Oh, it's closed right now. Probably. They don't have access to the feed either. I need to get IQ feed is what I need to do. And that's what you're unable to crack in the heat map. Yeah, you did. I know. Let me get that back up again. Let me get that back up because you told me it was going to go up. Now, where is it? There it is. Yeah, no, you told me it was going to go up. Now, wait a second. Wait. It goes up. And the bid and ask disparity comes back to nothing. And then you get this scary ghost guy in here again. Oh my god, that looks like Groot. I'm Groot. So now we have Minecraft and freaking Marvel at the same time. Jesus. This is insane. And I don't have data through Binance. I'll have to get that because I'm not gonna be able to use the CME data. This is nuts. Is it going to continue going up, or is that about it in your viewpoint from what you're seeing? Coin glass? You're using words I've never even heard. It's like you're speaking another language. Whoa, wait, what? Oh, no, that's not recent. That's so dumb. I hate the clickbait on those things. Um, what is coin glass? Okay. Okay, it's just data. All right. But how do you... Oh, is this live? No. Well, no, it's not live. This is delayed. Okay, okay, question. How do you take this and get it live? Like, how can I get this but put it in here? Okay, that's how. Um, this is live? I don't think so. It's just showing this isn't moving. Is it? Is this moving? But the times are off. Right, but crypto data API plans. But there's not, I mean, updates are less than or equal to 1 minute. So it's not fully live. It's still delayed. Oh, you have to refresh it over. So you just have to basically do that and then hit the refresh button. Ugh. Ugh. Can you code that? Jerry, what's going on? How's it going? Good to have you. How you been? Never tried paid ones though, so no comment. Okay, got you. Well, well. That's something we're going to have to take a look at. Jerry, did you just come on in, or have you been here for a little bit? I learned something new today. I'm taking Minecraft off this chart. I can't. I just can't with this. I need to figure out how to get the data to get the right stuff and do this. Um, just been chilling. Um, I know a way you can get Bookmap for cheap, but I still have to try it. Okay. All right. So I traded the morning session from Wednesday directly off the heat map. Directly off the heat map. I didn't in the stream, so you'll have to replay it. See, I'm gonna make you watch it. You see what I did there? Jerry, tell me. He got short excited now. Um, yeah, I traded, and then I figured out. So Short asked me yesterday, how do you read the heat map? And I'm like, I have no idea. I don't know. I don't know. I have it over here. I told him, I said, I have it behind the curtain. So I brought it over here and opened it up for him. I said, see, it's here, but I don't know how to read it. I don't know how to do it. Well, today, I'm so crazy. I was trading this range back here. I don't think I can get to it. Maybe I can. Maybe I can. Let's see. No, I can't. It only goes back so far. But I was trading this today and I turned around and went back to Wednesday on this in this stream and just traded it live. I did my pre-market analysis like normal, right? I did everything normal, but then I turned around and just did this without having the footprints up. So the idea behind this is this. Let me see if I can. So right here, what do we have here? We have one of my little favorite auctions, right? This becomes the indexed area of volume. Okay. And then you get another auction taking place at a higher price. And I don't see one right now, but let's just use this as an example. And now these two areas act like a magnet. And when we get in this area, we start accumulating inventory. And then we let go of the inventory down here. And this range doesn't work that well with it at the moment, but I don't have an auction up here, so I can't do it exact, right? But I was doing this today, and we were up what, $800-900 within. I'm trading at the open too. I didn't wait until 9:45. I traded at the open, and by 9:50 we were at like $800-900 in revenue with two contracts. Hit one stop and then one small loss because I would add one or get into one, it would hit the profit target, it would come back, I would add another. Will a big bubble once it is filled? Yes, and that's what it's doing. And that's what I noticed today when I'm trading in the range. So it would printing these big bubbles, right? But then it came in here, and then it was just like a little tiny dot of blue, right? And that's just a little buyer in there, and a little buyer, and a little buyer, and a little buyer. And of course, this is showing delta, where my volume bars, right, the footprints are showing total volume. So I'm seeing the difference in delta here instead of total volume. And I like the idea of delta anyhow better, because delta is giving you the difference of buyers and sellers instead of just total volume. So you can see which side is getting more aggressive in a way. But here we take the idea of my auctions of the buyers and sellers having a conversation around the same price. And it just worked out beautifully. I had one area today where it broke up, rejected. Then below that, though, was another auction. And it came down and it came up and tested that auction, which just so happened to be the low of the range as well of the breakout. And it came down to the auction that I put down lower, and it traded in that range. I had other things I was doing, but I could have traded with that range like 12 to 13 times today with a $230 stop and a little over 600 in profits trading 4 contracts. And then you get out at each one of the high volume areas between the range. Delta is God in my case, exactly. Yeah. And so, yeah, once an order gets filled, now what it's showing is a difference in the bid and the ask even when it's not filled. And so you can see how the bid and the ask are updating to current price. So you can see the support and resistance in the bid and the ask and the rejection of the bid and the ask as well, which you can't see within the footprint. I rather liked it, and it was pretty easy to explain it. And I'm reading it just like I would a footprint. It's exactly the same thing. It's the same way of reading it. Aggressive buyers, lack of sellers, support and resistance. You can see it all within it. It was just really, really, really easy to see. Really, really, really easy to read. So I'm going to let the community and let me know, what do you want me to do? Do you want me to go ahead and continue to use this footprint, or do you want me to transfer over and use the heat map? What's easier for you to visually see as I'm explaining the processes and trading? It was fun. It was fun, they said. And then Short wanted me to look at Bitcoin, and it looks like you're trying to play Minecraft on my charts. Literally seeing creepers and stuff. It's ridiculous. So you'll have to watch the video and let me know what you think, because I'd like to have your opinion. For me, footprints, but my case is different. As for me, HeatMap is not helping a bit. Right. And for you, yes, absolutely. But I think with the HeatMap here, and you see what I'm talking about and how it correlates, I'm wondering if that would even help you, because you could see, you might be able to see what's going on here. But the difference is this is still showing you a bar. I can try both. The only problem with both is this. Well, it's not even a problem. I would stop streaming on TikTok, because TikTok and the shorts themselves, right? You can only have so much data up. And so on TikTok, the right side here is now shown, but you can't really see anything of the heat map. So all it's shown right now is this bar to this bar. This is all cropped off up here. And then you're seeing from here to here. And that's all that you're seeing. Oh, let's put it over to the ES. I used to trade the ES all the time. The ES was my jam. I wanted to get to the point where I was trading 100 contracts with it, 100 lots. I only got to 25. All right, let's see. ES. Well, that's as far back as I can go. I can't go back any farther. I don't really see any auctions, but man, the ES is so rotational though. And so we come right back and test into this range of high volume. And so you have your high volume area right here, right? Price action comes up, breaks above that, comes in and tests the high of the range here. Not the high of the range, but the highs, the normal highs of the range, like the midpoint, right? Almost like VPOC. And it tests right back to the high volume here. Then it goes up, makes a higher high, comes back in, lower high, and then breaks up. And you have buying all through here, neutral here, but then buying, then strong buyers, and then the sellers come in, but the sellers can't even make a lower high. And then buying again, still high, you come right back into the range again, and now you go back to test the higher volume. It's the same. Exactly the same from what I was seeing in NASDAQ today. The yellow line, which you see is the thing which is important. Once it's taken, a range is complete, then take 50% of the range. And at the retracement target, another yellow line. I have said this is easy. What yellow line? I don't see a yellow line. Are we looking at this chart? Short. You gotta help me. I don't see a yellow line. But that's the context. And so when you look at this, and especially in this range, there's your high volume. There's your high volume area right there. And it goes right back to it twice. Oh, in CoinGlass. Okay. Okay. So you're saying in CoinGlass that the yellow line, which is here, okay, which you see is a thing which is important. Once it's taken, okay, and range is complete, then take 50% of that range. Now, when it's taken, the range is complete. Take 50% of the range. So you take 50% of this range of the range of price at the retracement target, another yellow line. Okay. And so are you taking the retracement then of the move of the bars themselves? Here, you can't see. Ugh. So here, that range, once the yellow line is taken, it was taken here, you take this range here and 50% of that range. Oh, yeah, I had a formula. Okay. But no, it was actually a really interesting concept, Jerry, because yesterday's show was asking me about it. I'm like, I don't know. I don't know how to read the heat map. I have it up here. I've been watching it a little bit, but I don't see any use for it. And then today, this morning in the London session, I just started looking at it, and this whole idea came to me. So then I turned around and tried it at the US session. It was like, oh my God. And it's a news day. I mean, a news day, it's a day before a holiday. So, we're closing early too. And then I tried it on the 1st of July, and it was phenomenal. It worked out really, really well. It's like I can see things in it that I can't see in the footprints as well, because to me, there's less noise. But the low volume ranges, it's exactly the same thing. You're basically drawing your own volume profile is what you're doing. What are these? What do these things do? Oh. Oh, wait. Oh, linear regression lines. Okay, that makes sense. So you have linear regression lines. You have a retracement tool. You have another retracement tool. Okay. So you have a few things you can draw on here, but you can't draw an actual volume profile on it, though. It won't let you do all of that. And this is giving you liquidity. Interesting. Oh, and that deletes all of your lines. Okay. Oh, that's giving you the liquidity areas. Okay. Sorry, I got a new toy I'm playing. Interesting. Right, right. And that's exactly what that's doing, is filtering out the big orders. But I'm not looking for the big orders anyhow. I mean, that's more of a like an iceberg thing. And I'm not looking for icebergs. I'm actually looking for, that point of anticipated support and resistance in the context of um the buyers and sellers coming in pretty much at the same area. That's the support and resistance that I'm looking for. Icebergs, large orders like that, they if you're looking for a large order, you're looking for large price, what you're basically saying is you're looking for a point of control. Okay? A point of control is just a magnet that you're anticipating price action to rotate around. I don't want to know rotation. Rotation is where there's chop. Where there's chop, you're getting in and out of the market around chop. And now you got to manage chop. And it's hard to do when you're running stops because it's going to stop you out. The market's going to rotate enough in an expanded range that it's going to continually hit your stop. And you're going to take small loss upon small loss upon small loss. This is why I'm looking for areas like a conversation. I'm looking for places of rejection. And this is why. Because I don't think there's a way to actually quantify rejection on a bar. Because the only way to quantify rejection on a bar is to wait for it to be confirmed. Well, if you're using price and volume, you're using the most accurate in the moment forecasting you possibly can. There's no lag to volume and price. One could be leading over the other, but there's no lag. I don't want to call it a leading indicator because I think the only leading indicator would be a crystal ball or a time machine. Because you go into the future, you knew what price it was then. In the future, you go back to the present knowing what it was, and then you go long or short knowing what price is going to be. So it's not a leading indicator because it doesn't tell you where price is going to be. But what we can do, and then if we take anything to price and volume to try to confirm it in terms of direction, now we're adding a lagging piece to it and it's no longer in the moment. So what I'm trying to do is piece together something that I can utilize that isn't going to lag volume and price for support and resistance or for confirmation of rejection. That's my point. And if I utilize icebergs, for example, or large orders or anything along those lines, big trades, whatever it might be, if I'm utilizing that information, what I'm doing is I'm pinpointing a high volume node. And a high volume node should create rotation. This was a high volume node, rotation, high volume node, rotation. I'm not interested in that. It doesn't help because you're getting in around rotation and you're going to get stopped on rotation. What I'm looking for is a conversation, buyers and sellers, to act as a level of support and resistance that you can then forecast or predict or anticipate what price action can do around or through that area. Does that make sense? Sure. It's a different way of looking at the markets from most anything else I've heard anybody talk about. And I'm not, patting myself on the back or, giving myself kudos. I'm really trying to look at this and say, okay, this is what people are saying. This is what people are teaching. People are having a hard time finding consistency in the markets. Why? What can we say that we know? What can we say is theory? And then how do we put it together? Yes, exactly. I thought this problem was only in Bitcoin. No, it's everywhere. Absolutely everywhere in every market. You answer this question and you provide the key to open any lock. It's like the guy in the Matrix, the key keeper, whatever the heck his name was. I don't know. I don't remember. It's kind of the same process, the same concept though. But we don't want rejection. We don't want, because it's lagging, and we don't want these high volume areas because price action's going to do that. But look, the auction happens after the chop. And it happens time and time again. Let's go back into the NASDAQ real quick. The conversation itself, right here, is pointing to the area of rejection. Not because it is rejection, because it's coming after the chop when participants re-enter the market in a big way. How to identify when the chop is finished? How to identify where rejection is expected when the price comes back and tests the area where the participants came back into the market after the area of chop? That's the best way I can explain it. Because we have nothing going on here, very little market participation. Then we get a robust area of participation, but non-directional, both directions at the same time. Price action breaks out of the range, comes back and tests the participation. This becomes the entry. Because that's expected rejection, anticipated rejection, not confirmed rejection, anticipated rejection. And where we can anticipate rejection, rejection no longer has to be confirmed. We buy into this area when we start seeing buyers step into the market. Where do buyers step into the market? Right there. Now I'll delete that so you can see it. There. Twice. And again above. And this is where we get inventory. And after the auction, anticipating the break. But the problem is, on the auction, you don't know if it's going to break down or break up. And there's no buyer participation here. The buyer participation comes in here. In the rejection area, the test, not in this initial test. We don't even buy here because there's no buyer participation. We buy here due to the buyer participation. And when we have a range, we know this is the bottom of the range. This is the top of the range. We enter in the direction of the range itself. So we're buying low, selling high. So break and retest with buyer response in the retest. Yes. Because the buyer response is the confirmation, but the confirmation is now happening in volume. It's not happening in some sort of lagging indication. And we're not confirming with a wick, which adds time. And anytime you add time to confirming activity, you're lagging. So we're still plotting time. We're still plotting price. We're still plotting volume, right? We're still plotting volume. We're plotting all of that. What we're not doing is utilizing a piece of time for confirmation. Because the time is what creates the lagging. When we wait for time to confirm, we now introduce lag. So the entries have to be, and the areas have to be based directly off of price and volume without including time. Because time introduces the lag. That's the theory. Now we have to build the framework around that theory to create the structure that we use to test. Any time frame for back end a retest is, I think, in 5 minutes the price will move way up. Right. And so it has to be in the moment as close to the live edge. That's one of the reasons why I use a 2-minute chart. I'm not using a 5-minute chart. I'm not using a second because it's too fast, right? You can't react to it in time. You can't react that fast. You need an algo or something else like that. A human being can't do it. But this is more like a 10, 15, 20 second chart, right? I need a test to see if it's too fast for me to react on. But once I see these buyers and this stuff happens in here, and I have my dome up over here, I can still execute it within these prices. And I would have done that today. Now I need to figure out how to set that up tonight, or tomorrow morning, so when I go in and test this over the weekend, I'm able to put the orders in and make sure I can react to it in time. But then we also have to make sure that we're not hitting a 10-second rule that some of the evaluations have, where we're entering the market and exiting within a 10-second, and now we're what they call micro scalping, and you can't have 50% of your trades micro scalping. You can't have more than 50% in some of the evaluations. Not all of them have that, but some of them do. And in this case, utilizing the heat map much more so than the footprints, because the footprints for my entries, I'm still introducing time. Because I'm still trying to confirm rejection. Because I'm still using volume data based upon time. It doesn't trade that much time around the area to develop the volume profile. It takes a lot of time to develop a range like this because the volume has to develop in the area. The heat map takes the time out of the equation. And every day I get closer and closer to the answer that I'm looking for. Because I'm open to the new information. Yeah, I know. I'm sorry, Short. It's what I'm doing actually is I'm not trying to explain it or overanalyze the point. This is what I'm doing, okay? When I come up with an idea and I think there's an answer, right? Every idea I start with the big picture. Okay, then I bring it down to the details. But then after I've done that, I go back down to the details and I bring it back up to the big picture to make sure that it's still aligned. Because you can come up with an idea of the details, even though it looks good from the top down, when you bring it back up to the bottom, back up again, it can break. And I test it twice. Top down, bottom up, up down again. Not to get too granular or to over explain an idea. It's to make sure that it doesn't break someplace in between. To make sure that I'm not missing something, to test it off of my own bias. And some people can't understand that, right? They think I overanalyze the information. No, it's the way that I process it. I make really, really, really good plans. And that's the reason why I make really, really good plans. Because if something's going to break, it will break in that form of analysis. not to over explain, but it sounds like over explaining. It sounds redundant. But the people that can get past that redundancy. Now, we also have a lower auction down here. And why didn't I pick this area? Because the higher volume comes in here. And what do we know about high volume? It's the high volume that acts as a magnet. That high volume exists here, acting as a magnet for the pullback. The low comes in, the buyers step in here, breaks the low, comes back in here. There's your buyers, there's your buyers. Because this is not, when it comes in, I'm going to have to watch this. Because if the offer lifts, from this buying, there's a buying and it comes against you a little bit. And then more buying and it doesn't come against you again. When you have real money, you have to be too analytical, might be a demo trader. Exactly. But at the same time though, right? Trading is a lifestyle. What you do in life, you're going to do in your trading, and what you do in trading, you're going to do in your life. Look, I use athletes for this, right? Look at Zion Williamson, supposed to be an amazing player. Look at the guy that just came onto the Lakers this year. What the heck is his name? Anyways, their lifestyle puts them into a position where they're kind of out of shape and they get hurt and other things happen because their bodies aren't in shape. The lifestyle doesn't support the game that they're playing. It's the same thing in trading. What you do in your life is going to determine what you do in your trading, and what you do in your trading is going to determine what you do in your life. See, when you have an hourly job, it's not necessarily the case. You might bring work home to you, but work isn't always, you can still do your job because it's mechanical. You can still do your job, even you could be a functioning alcoholic. Try being a functioning alcoholic while you're trading. It's performance driven. The Human Performance Lab. It's about human performance, human performing. And you can't perform at your top level if you're not performing your top level in your life. It starts there. And so I don't necessarily even think it has to do with a demo trader or anything else along those lines. A demo trader is going to stay a demo trader forever until they get the confidence to trade real money. But if they're trading the demo account in any way, in any way, they're never going to get the confidence because they're not going to get the results. So it doesn't matter if you're trading a demo or a cash account or a prop account. It doesn't matter. Once you go live, you're live. And your life is going to reflect in your live trading. Because it all happens in the present moment. And trading is one of the only things that you can possibly do other than athletic sales, being a surgeon, something along those lines, where your action is taken directly in the present moment and the results are immediately shown. This is why trading psychology is so important. But not trading psychology as in, oh, you have to fix, heal, energy work. I mean, all this other stuff that they talk about, meditation and everything else. You got to be on the court. You have to be in the moment, present, consciously consciously participating in your conscious intention. Because if not, you're not going to be in the present moment. Your habitual patterns will be. And your behaviors will reflect your habitual patterns, not the person that becomes aligned to action, aligned to intentional participation. The reels I have seen at least 4 billionaires, but in demo, that is too hilarious. Right. Exactly. Yes. Why? Because you can do things in demo that you can't do live. Okay. Like I can take a demo account with $400,000 and I could never take an expense trade, right? Ever, ever take an expense trade. But who has a $400,000 trading account? And so if you try to take that methodology into the live, it's going to break. And that's what I've been showing with my asset management stuff. I've been trying to figure out how to do it, but there's no way to do it within the prop accounts. There is if you have a cash account, but you need a good $40,000, $50,000 to ensure that you're able to do that. And you still might take a hit of 25 to 30,000. That's why you need 40 to 50 so you can build it back up again after that happens. If you have 400 to 500,000, you should never take an expense trade ever again. But you have to work up to that. And so when people do those type of activities in their demo accounts, right, they can't do it in the cash because they have to work their cash account up to that. So how do you do that? That's what I'm trying to demonstrate. That's what I'm working on. And my theory is we can't add time-based analysis into our entry strategy, or we've already introduced lag. And now we can't get in at the edge of the low. We're getting in someplace here for a long, or we're getting someplace in here for a long. And by the time we put our stop in, getting in here, we're already in the rotation. Probability speaking, the rotation is going to be wide enough at times to automatically hit our stop. The edge is here. And if we're using any form of confirmation, we just lost our edge. Anytime, because confirmation takes time. And time deletes the real edge in the markets. That's the theory. Now we have to create a framework around that theory. And then we have to test that framework within the lab. But any theory we create, any structure around that theory that we create, has to be aligned to the concepts. And everybody that out there talks about rejection, talks about everything, that has to introduce some form of time. Everyone. Thanks a lot, sir. Please share your insights of weekend testing and coming week. Have a great day ahead. Absolutely. And I'm not just going to share them. I'm going to be recording the whole thing. I'm actually going to be streaming it live. It's all going to be there. I'm not doing anything behind the curtains. I'm not doing anything that the general public can't see. Because once I do that, I've lost my credibility and it's not authentic anymore. Now I'm one of those billionaire demo traders. I have to do it live. And I have to show it live. I have to show the ugly parts, the good parts, the bad, all of it. Because that's the only thing that makes this authentic. And the only thing that somebody can know that it works and they can trust it. And that's the only way to develop your confidence to execute it. Anything else causes doubt. And the moment doubt seeps in, you're not going to execute it because you're going to be thinking about it, and thinking about it introduces time, and now you're the lag. So if I'm going to do this, this is the only way to do it. The only way is to do it live. Showing the good, showing the bad, and putting myself out there. And that means my lifestyle has to be aligned to this, because if not, I'm going to have days like yesterday where I'm just tired and it all falls apart. I have to get enough sleep. I have to eat right. I have to hydrate. I have to work out. I have to keep myself healthy. And I haven't worked out for the last 3 days. So on that note, yeah. And so short. So now you have a big picture of the philosophy of what it is that I'm really trying to build here. And this is everything for me. This is so important. It's the most important thing that I could possibly do. It's like it's my legacy. It's the one thing that I can put onto the physical reality of this world and say, "Hey, I lived here." And it only takes one person, one, to look at that information and have it adjust their reality in some way to make it meaningful. Any other questions, comments, concerns? And the urgency for me is, to be honest and real with you, I don't know how much more time I have in this existence. When the blood clots came, it took a huge strain on my heart. And we don't know how long that's going to last. How do I identify liquidity on the chart? So liquidity on the chart. It comes from a couple different places. Okay. One is, let me get this over here so you can see it. This is a great question. School of Wealth. Thank you for asking. Welcome, by the way, too. I haven't seen you here before. I don't think we've talked about this. So liquidity on the charts could be seen in a couple different places. One is in the orders. Okay, so you can see the liquidity by the resting orders or the resting contracts that are available at particular areas within the order flow. Okay, that can also be resting orders and other things, but that shows liquidity. Another thing that shows liquidity is the areas of the high volume where prices already traded and facilitated trade in those prices. And that comes in as seeing where, like iceberg orders or where the large orders took off within price. And you could see that within the heat map. That's kind of the point of the heat map itself. So that's where you see the liquidity. Now, the other place that you can see liquidity is directly into the footprint charts as well. The footprints show you liquidity because of the volume that's traded, but it only shows you the liquidity of the past, not the liquidity of the present. And so the only place to really see the liquidity of the present is to put your dome up or a heat map or something along those lines, where you can see the orders, the resting orders, other information within the book, depending on what level of book that you have. And that's going to allow you to see the liquidity. Because what's liquidity? It's the members, it's the participants of the auction and what's available to participant members. And as you get through the liquidity, price action continues to move directionally in that direction until the liquidity grab is done. And then price action reverts back to the opposite direction to the high volume areas to test to where the participants are going to get back in to that direction of liquidity. Or it continues moving in the opposite direction until the liquidity is found or participants are willing to get through the liquidity at other levels. Does that make sense? And it's an auction. If there was not any participants, then what's the point of liquidity? Stephen, welcome. Thank you for joining. Appreciate you. Did that help, school? Any comments, questions, other ideas? So I'm about to tell you that my view there is correct, is true, right? Just the way that I view liquidity in the context of auction market theory. and the way that I've put together to create the framework around the way that I view the markets. But there's probably close to 8-9 billion people in this world now, right? And so there's 8 or 9 billion ways of viewing that because we all have perception. And perception is what we use to view information that we see or receive from our environment, including the charts. It's your perception that creates your understanding of the charts. And so your understanding will be different than mine, and my understanding will be different than yours. How do I know prices going move from one to another? Okay, so first of all, we won't know, okay, because we don't even know what the next tick is going to be, and we don't know what the next tick is going to be after that. So we can't predict or forecast what price is going to do. The only thing we can do is anticipate, and anticipate's based upon the way that you create the framework around the markets. See, I can anticipate rejection in certain areas because I use auction market theory and volume profiling. And in the context of the volume profiling, I can look for areas where I would anticipate, not expect, anticipate rejection. Why? Because price action trades time and volume and price around areas which some people call chop. It's balance. Price action is merely trading in this range until it breaks out of the range, comes down into unfair lows, into low volume areas, and rejects to move back into value where it was once rotational, to move up into unfair highs, into low volume areas, and reject, to rotate a little but spend less time in these areas, more time in this area, to move into other areas, reject, move back through the areas, spend very little time through the low volume, back into value to trade into a range again. And if you get caught up in trading in the range here, and you're using a stop, chances are the market's going to move in a way where it's wide enough that it's going to hit your stop before your target because you're trading in a range. So if you use time as an indication of any way or shape, form, or fashion to qualify a position, then you're using lag to determine your entry point. Your entry point's no longer going to be around the high or the low of this range. It's going to be someplace in the middle, and that's where you're going to get stopped because you're trying to enter here when price action is going to range up here or range down here. So it doesn't matter what your entry points are because you're using time to lag your entries. So how do you stop doing that? You utilize the only two, not leading, but present moment indicators. Because I believe the only leading indicator is something that would be able to forecast price so you would know, right? So how do I know price is going to move from one to another? Well, that you need a time machine for, a crystal ball. So you could know because you went into the future, then you came back into the past and you know. All we can do is hope to anticipate. And one of the things that I'm working on for that is to be able to see volume, not in high volume like these areas here, because when you get into these high volume areas such as this, it attracts price no different than it attracts price here, and price becomes rotational in the area, and you run into the same problem. So what I'm looking for is a place where participants, buyers and sellers, get aggressive in the same place. That happens usually after the high volume range. A breakout takes place, and then price action comes back to that area. Then when the price action comes back to that area and buyers step back into the market, we buy around that area, enter inventory in that area. So now we have size. And then we move back, and with anticipation, we're going to move back up into an area of higher volume, which would be another range at higher prices. Another range at higher prices. where you have the same participation come into play, you have another range above, you short that range with anticipation it comes back to retest the high volume range below. And now you're trading in a range, getting in around the low of the range for a long and the high of the range at the high and for a short. And now you're selling high and buying low within the range because you're no longer lagged by time, because you're utilizing the two things that are as close to leading as you possibly can, the in the moment indicators. You're using price and you're using volume, and you're taking time out of the equation. And if you can learn the framework of that theory, you can create a structure around it from your perception, and you utilize that information to test it at the live edge to see if it works. And if it doesn't, you adjust the theory, you adjust the plan, the structure itself, until it does. And now you align your actions to your intention, which is profitable trading over time. Thoughts, questions, ideas? And that's what I do here. I create the theories, and then I create a structure around that theory, and then I test the ideas in the lab, which is at the live edge. The things that you won't see indicators because they're all time-based, and that creates lag. You're not going to see rejection because rejection takes price over time and introduces lag. Can't do those things because I'm introducing that time, I'm introducing that lag. Now I have a chance of entering around value where I'm in rotational and the chop is going to happen at some point. And now I'm just going to get chopped up like everybody else. And then we apply that structure to an imbalanced market condition to a trend. And now we can trade ranges, we can trade trends, and then we just have to identify where the market shifts between a range and a trend. That way we can identify the market shift itself and either stay out because we don't know if it's going to be a range or a trend, or we try to use areas to trade if it goes back into a range or it starts to trend. That's where the art comes into play, as it's very simple when we're trading around ranges or we're trading around trends, and it's all fun and games until we get that market shift. And the market shift comes from a breakout of a range. Why? Because now the question, there's three things we have to answer on a breakout. Is it a false breakout? If so, it's going to move back into value. Is it just a breakout that's going to create another range? Now we have balance. Or is it a trend? And what does it take in order to be able to determine which one of those three it's going to be? That's where time comes into play. Time smooths out the volatility of not knowing, so we can have an idea, so we can anticipate what future price action is going to be based upon that idea. Does that help? Thoughts? Questions? Concerns? Any other questions that anybody has? How cab? I don't understand what you're asking this school. I don't know what how cab is. MK, thank you so much for the subscription. I truly, truly appreciate you. I hope that you got something out of this. And if you have questions, please definitely ask. How can I get this kind of chat? What do you mean? What, this type of conversation? So I'm writing a book and I'm kidding. Kidding, kidding, kidding. I want to make sure that I'm understanding your question though. Are you asking, how do you get involved in this? Is that what you're asking? How do you get more of this information? Where do you join? How do you sign up? What course do you need to subscribe to? So if that's that's the place you're coming from. I don't have a course. How can I set this chat on my PC? Oh, gotcha. So my chat in the YouTube right now is not functioning properly on OBS. I have it set on OBS, it's just not working. I have to get that on for hopefully this weekend. That'll all be turned on. My alerts and stuff will be turned on too, and that will all come up on the screen. In terms of how to continue to get this information, I stream from 9:40 a.m. to 10:40 a.m. Monday through Friday, live in the US session on New York time. Okay. And then I'll do some trading in the London session. I don't know if I'm going to continue doing that, but we'll see. And then I come on at 2 p.m. New York time, and that's where I come in, answer people's questions, practice, do all those type of things. And all of that's free. I do have a Discord. When I'm in the London session, I'll show my charts and those type of things in Discord as well. And my charts, I'll talk things through just to provide some other learning. I'm also creating some educational videos to understand auction market theory, for example, volume profiling, where to draw your profiles, why are you doing it that way, what's the point, what's the reason, getting into detail with all of that. I also do my pre-market analysis and how I create my pre-market analysis in those sessions as well. And so all the teaching is free. I don't have a course. The Discord is there to ask questions, to learn, to be part of a community. But it's not paid either. I don't have anything whatsoever that asks for a dime. All you need is to show up with a desire to learn, with an intention of what it is that you want to create. And we're going to start aligning the action, to the to be the conscious participation to your intention, so you can start aligning your intention to reality that you want to live, and you can live within that fulfilled reality, between fulfilled intention and the reality of it. That's it in a nutshell. And then outside of the Human Performance Lab, I also have another YouTube, and the Human Performance Lab is put onto that as well. It's called Live the Return. And Live the Return is really, how do we take conscious participation, get it out of the bleachers, because it's sitting there watching your predictive behaviors be on the court, living out your life. How do we get that conscious participation on the court, so you can start taking that conscious participation and creating your intention? And that's the trading psychology aspect of it, if you want to call it that way. But it's not trading psychology. It's performance based, not a mindset, not a grind set, not motivation, any of that stuff. It's literally taking what we know about neuroscience, especially what Andrew Huberman teaches, and how do we take focus, urgency, action, and sleep and allow that to mark the neuroplasticity for change and to allow that change to occur so we can start creating new habits aligned to fulfilling our intention in our life, not just in trading, but in all areas. That's the gist. That's what I'm here for. That's what I teach. That's what I do. You're welcome. Anytime, school. If you want to join the Discord, go ahead and do an exclamation mark and social or exclamation mark and Discord. You'll get the link and it'll be there. Thank you for coming in today. Thank you for your questions and thank you for your participation. I truly appreciate you. And thank you for the subscription as well. I really, really, truly appreciate you. Any other questions, comments, concerns, ideas? Anybody in TikTok still? What do the thick green lines present? What, these ones down here? The ones down here at the bottom? Or these ones over here? The ones on the left or the ones in the center? These green ones here, just in case, these ones are the high volume liquidity grabs of the heat map. And then these ones are the ones that I draw. These are the areas of rejection. Okay, yeah. So these are the liquidity grabs, right? So this is where there was higher volume in this area for liquidity, for resting orders, or just the amount of orders that are available at that price. And then we grabbed a lot of those orders. And the same thing happens with the purple. So these are the sell ones and these are the buy ones. Any other questions? Well, on that note, I think I'm going to call it an evening. I'm going to be back on tomorrow. I don't know for sure what time, but it's going to be between more than likely, well, definitely be between, does it mean those lines present liquidity? No. So the liquidity is going to be presented in the numbers, basically, right? So the liquidity is going to be presented here. This is the liquidity. So just because price action comes down through here doesn't mean that it's going to execute orders. Okay. So like, let's say there was some liquidity up in here, right? But we didn't trade through that area for very long. We didn't grab anything there. We did that through low volume. So we just kind of just traded through it, right? But then we turned around and grabbed some liquidity up here because price action traded there for a bit. So if we go back down to this area, we might be able to see it. We might not. So here's a good example of that, right? So price came into this area and see how it kind of traded around a little bit. We grabbed the liquidity from this area. All right. Traded around there. Um, even if you don't trade around someplace, like even here, right? You don't necessarily trade around, but there could be a large lot order that got filled there. So you're seeing in the green is filled orders. What you're seeing in the numbers is available orders. This is the liquidity. This is the liquidity, how much liquidity was grabbed at that price. How much liquidity was filled. And these are the areas of the higher volume filled in those areas. And this is where weaker or lower volume is filled in those areas. And then the heat map, you can actually take it and where is it? It's right here. You can take the heat map and you can do the liquidity contrast, right? So you can take out all the weaker areas and then you can bring in everything that you want to. And so this here gives you a good indication. If you look at it like this, that's where these are all the areas here that we took a liquidity grab. So in other words, large orders or large volume traded around these areas. But just because large volume trades around those areas doesn't mean that we have a delta in difference in that area. Delta is different. Delta is volume, but it's a difference between the bid and the ask volume at a particular area, and these dots are representing an imbalance of that delta. So stronger buyers, stronger are more orders on the ask than on the bid. Because delta is all driven off of market orders, not limits. And liquidity grabs, right? These areas can be both limit and market orders. But market orders are the only market driven or price driven orders. Everything else is passive. In the futures markets, liquidity is pretty simple. For every buyer, there's a seller. For every seller, there's a buyer. Stocks are different. Stocks are different because you're actually buying an asset in stock, where in futures it's not part it's not a stock. That's why it's not on a like a stock exchange, right? Because they're contracts, they're a derivative of a stock. In other words, they're a price based upon another equity, but they're not equity themselves. They're something different. And so the liquidity in these markets is very different than the liquidity in stocks. What is a sign for huge liquidity that show will that there be are buyers or sellers in the market? I don't look at the markets that way. I don't. And this is why, because you can spoof, right? You can pull orders, you can do all sorts of stuff. I don't. You can look at icebergs if you want to. And this is kind of showing icebergs. And what icebergs are is grouped orders. So let's say there's a trader out there that's doing a liquidity grab, right? They're coming in here in this area and they're selling a contract, they're selling 5 contracts, one contract, two contracts, whatever it might be, right? They're grabbing liquidity in this area and they're doing 1 or let's say it's a bot or something along those lines. What icebergs will do is group those orders together and it will come up as a larger print. And so you can use that information if you want to, but I steer away from that. And this is why. Because those large those large prices, those large orders are going to attract price like a VPOC, a volume point of control, and price rotates around those areas. They don't reject around those areas. So you can anticipate price to go to that area, but then how are you going to execute around that area because it's just rotating at that point? And so there's a sign for you, icebergs. You're looking for icebergs, is what you're looking for. That could help you see where large liquidity was taken out of the market, that there are buyers or sellers in that market. You can use that if you want to. For that information, I look for indifferences in the footprint, right? Because the footprint indifferences, what's going to show you is where one, buyers and sellers are. Like you have 169 and 157, you got more volume traded in this area than in any other one, right? But it's also going to show you the imbalances too, where, for example, let's see if we can find a good imbalance example. 71 buyers comparatively to 16 sellers. But if you're going to use footprints, you need to learn how to read this information and what it's actually saying. Because see, just because there's 71 buyers, because 71 buyers compared to 16 sellers does not mean that market's going to go up. You've got to put it into context. Just because you know where there's buyers or sellers in the market doesn't mean you know the direction of the market. And this is total volume instead of delta, but you can put this up for delta as well. Um, and you can do that by just coming in here and adjusting it. Like you can do delta and total volume, or you can just do delta. And now delta, what it's showing is there's 13 more sellers here than there were buyers. There's 15 more buyers. There's 20 more buyers. There's 15 more sellers, 42 more sellers. And so you can use that too to get that information. And an ask bid split, that's just what it is. It's just taking the bid on the left-hand side, the ask on the right-hand side, and it's printing the total volume traded, not the liquidity, the amount of volume traded at that price at that time. So you got price, time. Okay, get it now. So what is the right information to know the direction of the market, or what should I be looking at in the first place? So there's as many ways to answer that question as there is people in the world. Okay. So it's kind of a loaded question, right? What I can tell you is what I do. Now, that doesn't mean that what I do is right or it's the only thing out there that works or anything else. It's just merely my way of looking at the markets. And the way that I do that is through auction market theory. Okay. I utilize auction market theory to give me structure to determine what I would expect price to do around certain areas. Okay. I'd expect price to be rotational in this area. I would expect price to come back and test this area up here. I would expect price to more than likely reject this area. So we would expect highs, the high of the day, to be someplace in this area, just like this bar did. The same thing here. I would expect some sort of high or low to be put in here. Why? Because I'm expecting price action to reject from this area. And what is a high or low of a day? Rejected price. It got there, accepted, but then it rejected. We know that because it became the high or the low. Okay. So that's what I do in the context of being able to start to create a framework. And these profiles are based on daily charts. So this is a daily chart of all the sessions, Asia, London, and US. And then I have just a daily chart of the profiles. And what are these profiles? They're volume. They're not time. They're not candlesticks. It's not price. It's a volume at price, because volume tells me where I expect price to go. Okay, because it's going to come back to the higher volume areas and it's going to reject around the lower volume areas. That's just what price does. If you look at any price, you can see it. It came down and tested the high volume. It rejected around the low volume, and it traded in this area. We have 3 areas of high volume, really 4 in this particular bar. And where did price action trade around once it got back to those areas? Well, look, high volume around this area. And then it traded high volume below this low and higher volume directly through this area. Because price action typically behaves similarly around high volume nodes and around low volume nodes as it would in any given day. And they usually come back and trade around those areas. So what I do is utilize a framework around auction market theory through volume profiling that gives me areas throughout a day of where I would like to do business. And then I utilize order flow to time me into the market around that theory. And then if the actions are aligned, beautiful. The theory and the structure are aligned. They're working. If the results are not favorable, well, then I have to go back to the theory, or I have to go back to the structure, make some adjustments to them, and then take those adjustments, bring them to the lab and practice them. And practice them until I can know where to enter, how to enter, why I'm entering, and I can learn to trust my indications over time because they're favorable and aligned to my intention. That is a structure that you can use to learn, to understand or predict or to anticipate market direction, and then how to enter around those areas. I don't teach indicators. I don't teach anything other than those concepts. And I apply all of those concepts to the live edge in every single one of my streams. And today, I did something that I'd never done before, live here in this stream in the beginning. And I applied how to use a heat map to live edge for our Wednesday. So I took Wednesday's data. I started at 9:30 a.m. and I started trading the market. I think it took my first trade around 9:34, 9:35. So I literally traded the open of the US market. And most people say, don't do that. It's gambling or whatever. Let's test that theory. Just because somebody says something's true doesn't make it true, because we might see through perception something different that allows us to act differently to the information that we see. Test it. Don't take everything with a grain of salt and test everything. So you can be satisfied with the results. You know how to enter around the markets. You know when you're going to enter around the markets. You know why you're going to enter around the markets. And then it's just a matter of when and where. Because when you know what, why, and how, when and where no longer become questions. It's just a matter of time. When the market moves in an area where you want to take action. And what happens when those two things match? You take action, because you already know what, you already know why, and you already know how. That's how you do it. Not because some guy behind a camera and a microphone told you, hey, this is what you do. What I teach is a framework. It's kind of like the first person that's coming to my mind is Tiger Woods. Okay, take Tiger Woods in his prime. What do you want? Do you want his favorite club, or do you want his skill? I don't give anybody LeBron James' ball or Messi's ball or Tiger Woods' club. I give them the framework that they can develop the skill. And then it just depends on how much of a professional you want to be. What performance do you want out of yourself? Do you want to be an all-star? Do you want to be a Hall of Famer? Do you just want to be the sixth man off the bench? That, my friend, is intention. Any other questions? Anytime, school, anytime. You are so welcome. Thank you for being here. Thank you for your questions. This is absolutely amazing. This is what brings life to my streams, are the participants, stepping up and asking your questions. This is phenomenal. Um, I don't I don't pretend to have all of the answers. What I do know is a lot of what doesn't work. And that helps me steer into the directions of what does work. I took my first trade in 1998. I retired from trading in 2019 due to a divorce. I just came out of retirement about 3 months ago. Just watching streamers and stuff. I wanted to stream. And so I was like, what do I stream? And so I just watching other streamers, and I came across trading streamers, and I'm like, man, you know what? I think it's time that I do some things that could be really useful for some individuals. I don't sell evaluations. I don't sell a course. I teach a lot, but I don't tell you what to do, because that's up to you. And it's not because you can't lead a horse to water. It has nothing to do with that. It has everything to do with your makeup and who you are. And to understand that and to be respectful of that truth, to let you be who you are and to help guide you in your own development, because it's you who has to develop you, nobody else. I can't develop you, but I can give you the framework that you can use to develop yourself. That's the key. My nose itches. And I don't just teach and preach. I do it at the live edge. Everything I do is live edge. Everything I practice is at the live edge. Why? It's the authenticity. It's so somebody can come in and they can start knowing that things work, that they start coming together. They can see where they break down. They can see where I break down, like yesterday, because I didn't get enough sleep. You can see the whole thing unfold, and they can make the decision for themselves. Is this something I want to invest time in? Is this something I want to follow? So now what are we going to learn? Natesh, how's it going? What do you want to learn? What do you want to know? What do you want to learn? What would you like me to show you? Welcome, by the way, Natesh. Good to see you. Thank you for coming in and asking your question. I appreciate you. You guys are coming out of the woodworks today. I love this. Thank you so much. This is fun. Tomorrow, between 10 a.m. and 2 p.m. New York time, I'm going to go through my whole process from start to finish. How I create my my pre-market analysis, everything that I do in that concept. And then I'm going to turn around, excuse me, and I'm going to use this chart, this heat map, to trade that plan live. Now, of course, it's going to be, on preloaded data, because we don't have live markets tomorrow, but it's going to absolutely be a replay of another day. I'm probably going to replay Thursday of this last week. So meaning the first thing I should look at is the volume profile, right? Yes, I would actually, if I was you, I would start looking at the volume profile. That's where I would start. I should have a video up today or this weekend that actually just teaches you how to draw a volume profile. And then once you understand how to draw a volume profile, now you can start drawing a profile in your charts, and you can start seeing how price action behaves around those volume profiles. And once you can see how price action starts behaving around those volume profiles, now you can start determining how price reacts around certain areas. That's where you can start seeing low volume nodes and areas where you're looking for entries and stuff. Nitesh, can I know your setup? Well, yeah, I've pretty much described it quite a bit today. My setup, my actual trade setup where I enter and exit, a lot of it is discretionary. I don't have indicators. I don't have exact levels that I'm trading from. I have a framework that I set my areas that I'm interested in trading around. And then I utilize volume and price as it comes to me, and I pinpoint areas where I would either like to scalp around or out of, and then take my scalps and possibly turn into a day trade depending where we are in the market. That's what I do. I don't have a 1-to-1, 2-to-1, 3-to-1, 4-to-1 risk reward ratio. I was trading around an area today where I had four micros on. My stop was $230. I had four different targets put in. Had all four of them been hit, it'd been a little over $600 in revenue. So you're looking at pretty close to almost a 3-to-1 risk reward ratio in that particular position. But I don't believe in risk reward ratio because I don't have just a set entry or a set target. I'm utilizing the information that the market is giving me, and I set my targets and my entries around that information, not around a defined set of rules that the market doesn't care about. The market is an auction. And in that context of the auction, there's participants, and those participants behave differently from moment to moment and day to day and hour to hour and minute to minute. And if I take what I have found since trading from 1998, right? Started trading in 1998, all right? That my set trading plan with my set entries and my set exits, there's always a market condition that will cause a major 20 to 30% drawdown. I've never had a mechanical methodology that never created that result. Now, I've had mechanical methodologies that have taken $15,000, $20,000 accounts and turned them into $65,000, $75,000 in a matter of a few weeks, like literally 6 weeks. Okay. But I don't trade a mechanical methodology because I don't have 20 to 30% drawdowns anymore. Because I don't trade mechanical methodologies, and I don't believe in the mathematical magic that, smart money is using, because they're not. I got a speaking skill? Well, thank you. I appreciate you. Look, I'm not here to sell you a course. I have nothing for sale. I don't sell anything. I don't sell evaluations. I don't sell a course. I don't sell a discourse channel. I don't sell anything. The only thing I can say is this, okay? We are all in a market. We're all in an industry, and we're all trying to get to the same place: profitability. Well, I know a lot about what non-profitability looks like from my experience. Let me show you, let me demonstrate to you what profitability looks like. I'm not going to tell you, I'm not going to show you some statement. I'm going to demonstrate it at the live edge, the only place where it matters. And I'm going to share with you the theory. I'm going to share with you the setups. I'm going to read order flow with you right when it's happening in front of you. You're not going to understand all of it because I see it in such great detail, and I'm able to speak it clearly and quickly enough that you're hopefully going to be able to get something out of it. But what I'm not going to do, what I will not do, is tell you if you just go long here and you just go short here, you're going to make money. I'm not, because it's a lie. Because nobody can do that. Nobody. I really want to learn. If you'll do a full video on volume profile, I'll be glad, because I really want to understand that part. Sure. Go onto YouTube right now. Go in there and look up Live the Return, and go to the day that, how to recover from a $4,500 expense. Go into the one of a full day of trading. Go into any of those. I've already demonstrated it. I've already shown it. I've already shown what you can do with auction market theory and volume profiling. It's all in there. Move something on the screen too. You just speaking? Yeah, I'm just speaking right now. I'm teaching. I have individuals in here that are asking generic questions. And there's in generic questions, there's only teaching. You can't demonstrate, you can't show a generic question, right? You can show something of detail when detail is asked, but you can't ask detail unless your general questions have already been answered. And price action isn't live right now. We don't have live markets. The markets are already closed. Markets won't start being live again until Sunday night. So there's nothing to move around in the charts. Am I just going to move something just for the sake of moving it? Nah. It's not me. It's not authentic to who I am. I mean, I could play another day, but what's the point of that? Because I'm not actually trading. Why watch data that I can possibly get a bias on, right? Why not use the data for what it is so I can practice my profession properly? No different than an athlete would. You know, you don't just see LeBron James show up on the court for a game. You don't see his practices, but he's there. Kobe Bryant was there at practice all the time. Michael Jordan, same thing. You practice, but I'm not going to practice behind the scenes. I'm practicing live. And every time I practice live, I show my pre-market analysis, how I'm setting the day up, where my areas are, why those areas are there of interest. I mark all of my areas. I show everything. And then I go into the short-term charts and I show how to read order flow around those areas. How to read, how to anticipate where price action can go, what we're looking at, where is the auction, who are the participants, what are they doing? And I do that in every single video that I trade live in. So you can learn to develop yourself into a trader that matches your perception and who you are. That's why I can't teach you how to trade, because you're different from me. You see the world differently than I do. Your perception is different, and perception is what shapes how we see things and how we interpret things and how we act. And your perception is going to be different than mine, so you're going to see things in the chart that I don't see. You need to use that information to your advantage, because your unique self will create something unique out of a framework that's similar to somebody else is using. What is the most thing I should look at after the volume profile? So this is what I would suggest you do. Go back and watch my videos. Go back and watch the videos that says live trading. Watch as many as you possibly can. That's going to show you everything within the context of the framework. That's it. That's all I can tell you. If you're interested in auction market theory and you want to learn auction market theory, go back and watch any video that I have done that says live trading on it, and you're going to learn every single piece of information in the theory that you possibly can. Nothing's left out. It's all there. From the daily profiles to the 30-minute custom profile and how to draw them and why to draw them and why you're drawing them, to how to read them, why they're there in the first place, what they mean, and then going down into the granular information of the footprint charts and how to read volume to get you into the market. Go back and watch this video, because I replaced the footprint chart with the heat map. And I might start using the heat map. I don't know. I kind of liked it. The first time I ever did it live was here in this demonstration. And yesterday I got a question. They're like, how do you read the heat map? I was like, you know what? I don't know. Here, I'll show you behind the curtains real quick. You can watch my video from yesterday. It was yesterday afternoon at 2 p.m. So it was day 3, or day 4, and it was the second session of that day. It'll be in the title. And they asked me, how do you read the heat map? I was like, I don't know. I said, here, I'll show you behind the curtains, right? Behind the curtains, because it's not on my screen that you can see right now. I have this up. It's the only thing else I have up that you can't see. And this is the heat map. And I don't know. I have it up to see if I can glean some information out of it, but I don't know. I really don't use it, and I don't know if I'm going to. And I put it back. And then this morning, I came over and I just glanced at it and I saw something in it. And I started to see the same information that I see in the footprint. I'm like, oh my God. And so I started to work with it a little bit. And I kind of got an idea what I wanted to do with it. And then I demonstrated it live. And I'm in between 9 9:30 and about 10:52 or 9:52, so 22 minutes in the market, trading two micro contracts, not the macro, not the smallest ones, the minis. Trading two minis, sorry, I'm getting tired. Trading two minis, I was up about $900 in 22 minutes. And I took my first trade at like 9:34, 9:35, and most people are like, "Oh, you can't trade the open. That's gambling." Okay. All right. If you say so. I'll believe you. Not really. It's perception, guys. But that's what I do because I know the areas, I know what I'm looking for. I don't use lagging indications. There's no leading indications. The only indications that are closest to leading is volume and price. That's it. The second you bring time, what's time? Confirmation. The moment you bring confirmation into the market, you're already too late. You're already lagging. Keep that in mind. And everything that everybody does brings time into the equation. If you're waiting for a pullback to a particular area, it takes time to do that. You're already lagging. And you're expecting that price is going to react to some magical level that you don't even know why really it exists. You just think it works. And then you use your 2-to-1 or 1-to-1 risk reward ratio, hoping that it works over time. I'm not hoping and praying here. That's not what I do. I understand the auction. I understand the participants. And I trade around that understanding. And I do it every day. So what's the next thing? Watch my live videos and see it for yourself. And you determine if that's what you want to do. One of them, I was down like $5,500 and I traded myself out and I was up like $250 by the end of the day. And that was the only one that I was actually really down on. And that was a really, really, really hard day to trade. Hard day to trade. And I kept saying, if your risk limit is this, if your risk limit is this, you need to stop. You need to stop. But I'm going to keep on to show this demonstration. And I was down $5,500. I was like, screw this. I'm going to trade myself out of it. Sure enough, I did. I was up $250 like an hour later. It doesn't take much, guys. You should be able to make anywhere between $1,000 to $2,500 per contract every hour you trade on average when you get this figured out. But most people don't get it figured out because all they want to do is use their lagging indicators. Now, I'm not filling you with false hope when I say that. That has nothing to do with it. It's the reality. It's the truth. I had an individual, a mentor that came to me one day and said, "Hey, how much money do you want to make?" I'm like, "What do you mean?" He's like, "How much money do you want to make?" I said, "I don't understand what you're asking me." So you need to understand how much money you want to make because that's going to determine how much time you're going to devote to your trading. He goes, "I want to make between 1,000 and 2,000 a day, so I spend an hour trading." I watched him trade for 5 days. He's not with us anymore, and he was the most phenomenal trader I've ever seen. This guy, some way, somehow, I still can't do it, figured out how to go short up here, how to go long down here, how to go short here. And he did it on almost every single bar. He would go short up here. He was a bond trader. He demonstrated it to me in the ES. That's how I started to know that trading was possible. Not just possible, it was more than possible. And then I started asking, why can't most people do it? And now I'm here, demonstrating how to do it. Not telling you how to do it, demonstrating it at the live edge. Because what people say is empty and meaningless. What they do gives meaning. What are you going to do? What meaning are you going to allow to show up in your life today? Any other questions, comments, concerns? It's too late in the day right now. I'm not going to go back into another day and demonstrate anything, but I will be doing it tomorrow between 10 a.m. and 2 p.m. 100%, without a question. And I'm probably going to go through multiple days tomorrow. Probably going to stream for, 5-7 hours, just going through and practicing, because I need to practice on the heat map. But that's also the dedication that I have to my trading too, and why I can demonstrate this stuff, because I put the time in. Nothing's handed to you in life. Nothing. But nothing is taken away from you either. Any questions, comments, concerns? If not, I'm going to jump off of the stream tonight. I haven't eaten dinner yet or done anything along those lines. I need to make sure I'm taking care of myself, because what we do in life is what we do in trading, and what we do in trading is what we do in life, because it's performance based. All of it. Well, on that note, I want to thank everybody for being here. I want to thank your time. I want to thank you for your time. I want to thank you for your participation, for your questions. This has been an amazing session. And it's because of you, because you decided to show up in a meaningful way, and it created meaning for other people. And that's what this is all about, to provide meaning in our own lives, and it's going to shine through in others. I want to thank everybody for being here. I want to thank everybody for being you. I hope everybody has a great weekend. I'll be on tomorrow between 10 a.m. and 2 p.m. I'm not sure which one yet. School of Wealth, you are so welcome. You are so welcome. And I'm not trying to cut your questions short, right? What you need to learn after the volume profile, that's going to be up to you. I can't answer that for you. I won't answer that for you, because you're you. You're unique, and it makes you special. And nobody can do anything to change that specialness that is you. All right? That's the key. You have to figure that out. And you have to do the work to make that happen. Not grinding. What's grinding? Something that you have to do trying to get the results that you want. You grind when you're out of alignment. You're fulfilled when you're in alignment. And I'm teaching you alignment. Aligning your actions to your intentions through conscious participation, so you can fulfill your intention and live a fulfilled life. A fulfilled life. And what is fulfillment? Synonymous with joy, happiness, peace, prosperity, clarity, all the things that everybody says that they want in life. But they forget, because they're too concerned with their physical well-being, with the physical reality of their existence. And we can do both here. And I'm going to teach you how. I hope everybody has a great weekend. I hope you enjoy yourselves. And until next time, be safe, be kind, and know that you too are loved. Enjoy.